liquidity, right? And that's what we've talked about. You have monetary and fiscal policy initiatives that are just so incredibly accommodative. And so I think that is really the basis for a lot of the excitement. At least it's a tailwind, if you will. And then when you couple it with, on a week-over-week basis, on a month-over-month basis, data points are getting better. I think that matters. The market is a discounting mechanism. And if we are starting to get better and get no worse than April and May, I actually think you can continue to gain momentum and confidence. Confidence is what it's all about. And I think you're slowly starting to see it. Oh, by the way, consumer confidence today was a little bit better than expected. So we have to see if the reopenings actually do go successfully. That is a very big thing that I am watching. But let's just say that they do go well. Then I think you have these building blocks, and you have these sectors that I mentioned before that are still down 20 to 35%.
Yeah, I mean, part of me, Josh, says, okay, look, liquidity, it's great. It gives you a pulse, right? That's what it did. It brought things back from the potential death of the economy, if you will. It gave you a pulse. But you still have to be able to run a long way. You're going to have to get some improvement fundamentally in the economy if we're going to be able to take significant steps forward, right? I mean, I get it. Liquidity is a huge story, but it's going to take you so far.
So here's the problem.
You're going to need to build on it somehow.
You're right. Like, in other words, if you think about liquidity as like revving the engine, pulling the engine, well, at a certain point, you need the engine to run by itself. But here's the problem with that. I can't think of a more dystopic end to 2020 than new all-time record highs in the S&P 500 and unemployment hovering somewhere between 10 and 25%. Like, that would really put the capper on the last 4 or 5 years of what we've seen go on.
You're right.
And so when you talk about and by the way, you talk about an election happening in the midst of that. This is going to be fascinating, the way people who haven't returned to work or own a business but haven't seen their business get back even to 70 or 80% of where it was 6 months ago. You think about those people watching the S&P 500, which half the country has very little involvement with, coasting to all-time record highs. And then you say, well, what happens then with all this liquidity? Like, it was good. It definitely helped. How do you take it away? We know that it's very hard to do that. Think about what went on in 2018. GDP was hitting records, right? You had great retail sales. You had great almost everything. You had wage gains, everything you could want. And the Fed did one rate hike too many, and the stock market lost 20% in 7 weeks.
Yeah.
So it is very hard to take this liquidity back. It's way harder to take it back than it is to give it. And I want you to think about Europe. The All-Country World Index, ex-US, is on fire right now. It's up over 3% on the day. Absolutely ripping. European stocks are hitting their highest levels, Japanese stocks too, since early March. They have not had the recovery that the S&P 500 has. There's an article in the Journal today about a huge amount of European employees whose paychecks have been removed from the corporate payrolls. The government is directly paying workers in places like Germany and France. How do you take that back? How do you tell corporations, okay, that was a fun social experiment. These are your employees. We're going to let you pay them again.
Right.
No, you know what? I like it like this. You pay them. How are we going to live like this long term? We can't. So how do you remove this liquidity thoughtfully? I don't know.
Yeah, I don't think we're going to be thinking about it for a while either, because the liquidity is going to be with us as long as it has to be. Let's bring in another voice to the conversation now. Jeremy Siegel, he's a professor of finance at the Wharton School, University of Pennsylvania, joins us now on the phone. Professor, it's nice to have you back, and I hope you've been well.
I have been well. Thank you very much.
Well,
and by the way, I agree with you 100%. I've been saying this for weeks. The liquidity that was created by the Federal Reserve is totally unprecedented, far exceeding that of the financial crisis. M1 money supply in 8 weeks is up 25%. I have never seen that. And I absolutely agree. There's no way they're taking that back. And as a result, that is all going to be flowing into the stock market and the economy. And I'm still one of the few voices out there that think that we're going to have inflation in 2021. Nothing double digit, nothing hyperinflation. I'm not talking about that. But for the first time in over 20 years, this liquidity, this money is going to find a place to go. And it's going to, and that's what's happening right now. The market sees this happening.
I hear you. I mean, there's no denying that, Professor, liquidity has gotten us to S&P 3,000 and Dow 25,000 again. But if we're going to hit new highs this year or early next year or whenever we do, if we do, aren't you going to need the fundamentals of the economy to start playing ball with the liquidity?
Well, they will. I mean, I think they will. I mean, obviously, I do think the market will hit more new highs, but certainly before the economy does. It's really going to be lagging. You know, should we be that disturbed about? I mean, we're talking about like the politics of envy. Like, oh my God, I'm still suffering. The market's hitting new high. I think there's going to be a recovery all the way around, and we're going to all be thankful for the recovery that we've had. Listen, the good news is still coming on the vaccine antiviral front, that we can avoid a second wave, and I think that's a key thing. That's a key issue. I think that will really motivate the election as well as what's going to happen to the markets in the fall.
It's somewhat perverse, though, no? I mean, you've got 25,000 on the Dow, 3,000 on the S&P, and 30-plus million people out of work, Professor.
Yeah, I hear you. Listen, I think in retrospect, we will look at the lockdowns as the wrong policy. Social distancing, masks were right, and the CDC was really slow off the mark on that. You know, we could have kept many more enterprises open and relieved much of the seriousness, not all of it, of course. But you know, history will show that we really, unfortunately, did not follow the right policy.
I mean, look, unless you can turn around and some will certainly turn around and say, well, imagine what would have happened, Professor, if we didn't have any of that policy. Who knows how bad things could have been? Who knows how big the numbers could be? As we're sitting here talking about on the precipice of 100,000 deaths in the United States, too, right?
You know, that's right. But the question, you know, there's a difference between the lockdown, which was closing all small stores instead of those, quote, deemed essential, and, you know, enforcing masks and social distancing. Now, some say you can't really have effective social distancing without a lockdown. I'm not sure. You know, we haven't yet seen the surge in cases in Florida and Georgia, Texas, and some of the others. Some people say it might come later. I mean, again, history will show, but we do have countries that had not gone into as extreme a lockdown. They're not going to suffer the amount of unemployment that we have, although we really, of course, we're going to have a severe world recession that's coming up. But you know, again, I mean, we will look back on this and say, gee, there are places we could have followed. I mean, we take a look at the German model. And many of the Asian models, which did not go into the outside of China, did not go into the extreme lockdown that we did. Well, they did not go there in Taiwan. They did not go there in South Korea.
This is going to be a certain topic of debate moving forward. You can sense it, and in fact, we're already having it. Let me ask you this. Let's cut to the chase, Professor. You're obviously sound optimistic on the market. Are we going to hit new highs in 2020? Is that a real possibility, or is that just being too optimistic?
Believe it or not, it is a real possibility. In fact, given no serious second wave, which could mean just effective therapeutics without even a universal vaccine, in my feeling is it's even a likelihood that we will reach it. You know, one of the unfortunate things about the lockdown is we've actually improved the prospects of the very companies in the stock market. We've widened the gap between large and small, and between those people feeling the pain and those people that have their portfolios. Yeah, I mean, it was almost a capitalist dream. How do we destroy the competitors? Lock them down and let everyone go to Walmart and Target and all the big ones, keep them open and then get them used to it. Again, history will look back.
Doesn't that mean it'll revert, though?
What?
That's Josh Brown asking you a question, Professor. Josh, go ahead.
Yeah,
Hey, Professor, it's great to have you on. I'm glad you're well. But what you're saying though sounds like it's almost a tautology, because if we say that the lockdowns closed off independent businesses so that Walmart could do double its volume in a given region, right? Let's say, If we say then that the reopen is going to be good for the economy and social distancing is preferable to lockdowns, wouldn't that argue against the stock market?
Yeah,
how do you have it both ways? Because now you're going to have these new stores open.
Correct, but we already kind of did the shift. You know, I mean, Target and all the rest gain customers. Sure, some of them are going to go back. I mean, I like the opening up, but there's going to be a permanent shift. They have the money and the space to make it safer in the minds of the consumers. It's going to be really tough for these to get us back. They will eventually, but boy, we gave them a bigger push than they could ever do with a $50 billion advertising campaign, in my opinion.
Well, I mean, that's not comforting to a lot of people. Obviously, that's a difficult conversation to have, Professor. When you're talking about the heartbeat, right? The heartbeat of this country is suffering so bad. Small businesses, and they're going to be, you're saying, forever.
I
impaired.
didn't say forever. I say there's a shift. I think restaurants are going to come back slowly. Small businesses come back slowly. If we didn't do an absolute lockdown, they would have come back faster, and we wouldn't have had as much unemployment. Yes, I mean, there's no way to avoid a sharp recession.
Let me ask you this.
I'm just saying that I think many states and widen the gulf, unfortunately.
So let me ask you this. We know what's gotten us to this point, right? These big name tech stocks, the Apples and the Amazons, the Googles, Facebooks, and Microsoft, et cetera. If you think we're going to hit new highs, and you say it's probable that it could happen, it may happen this year, what's going to get us there? Do we continue with what's working, Professor, or do we now use the opportunity of thinking the economy is going to rebound faster than we thought to rotate into cyclical stocks that were in many cases just left in the trash can?
If we get a therapeutic or even a beginning vaccine, or we avoid a second wave, you want to rotate. Obviously, if you think that's going to come back with ferocity in September and October, then the techs will continue to outperform and do well. But both sectors, tech and non-tech, will be stimulated by the huge liquidity that is, as was said just before I came on. That's just not going to. The Fed is not going to pull it all away. They were below the target 2% for 2 decades. They say, hey, I'm going to run at 3, 4, 5%. And all this liquidity is going to come in. More employment. It's going to be a good economy. It's going to be a moderately inflationary economy. And those are the economies that history says is actually good for the stock market. And I think that's what investors see coming. And that's why they're buying stock.
And you don't think the joke's on us, Professor, that the market has run up way further than it should be, just given where the economy is and how high unemployment is, and that it is ripe for a correction on the first bit of bad news?
Well, there's 2 things that one should consider. First of all, on the unprecedented liquidity that was pushed into this market, that's number one. And secondly, we really realize, and I said this even way in February, stocks are long-lived assets. They depend on earnings far more than 12 months in the distance. Over 90% of the value of stocks depends on earnings more than 12 months in the distance. And I think that the combination of liquidity and looking ahead, both of them saying, hey, where do I want to be? I don't want to be in bonds, not now. I may want to be in residential real estate. I may want to be in some inflation hedges, actually. But I think right now they're saying, stocks are going to are going to take an advantage in this sort of environment, and that's where they're going.
Professor, I'm going to leave it there. You be well. We'll talk to you soon.
Thank you very much.
It's Professor Jeremy Siegel. All right, gang. Michael Farr, this becomes the next wave of our conversation now. To rotate or not to rotate. Let's listen to what Jim Cramer said this morning. We can react to it on the other side. You heard what the professor just said. Here's Cramer.
I say stick with what's working. I know it's boring. I know that people want to rotate. It's something that portfolio managers love to do. I don't like to rotate into any stocks that are going to have numbers cut.
Okay, Michael Farr, how about that?
Okay, so Professor Siegel might be right. And we're going to find out here, right? We're going to find out if either the folks are saying that one more thing is coming, we've got another dip and the economy prevails, or Professor Siegel's right. In terms of what Jim Cramer said, I think Jim Cramer is about 60 to 70% right. I think you continue to stick with those stronger balance sheets that have been working, but that can't be your whole portfolio, right? I mean, so you can own Microsoft, you can own Apple, you can own Johnson & Johnson and Procter & Gamble and PepsiCo, and I own those stocks, but I'm also buying and I've owned some other stocks that have been beaten down that I think have a great opportunity to perform. So some of those smaller and mid-cap stocks, even a name like Valmont, which I've mentioned on this show before everything got whacked, is going to benefit from infrastructure. It's off 30% off of its highs. There are other companies, I think, so you have some opportunistic out there.
So, Stephanie Link, this notion of either rotating or not rotating, right? You've got Moffett-Nathanson out today talking about Alphabet and Facebook. These have been big winners. They say they're running out of headroom on their price targets, right? I mean, how much can you keep raising price targets as these stocks continue to run up? The other side of that is JP Morgan. They're doubling down on their call for a rotation into cyclicals. Morgan Stanley still embracing cyclicality. Tony Dwyer, frequent guest on this network. Value, banks, and tanks. That's what he says. So where are we? Is it time to leave some of these stocks behind? The Microsofts, the Apples, the Amazons, the Googles, the Facebooks, these high-flying marquee tech names, and rotate into some of those more unloved, more cyclical areas that will improve if you think the economy is going to improve.
I think you want to have a barbell, Scott. I mean, I think the FANG stocks are secular growers,
yes,
and they're trading, and those names that you're talking about are trading at anywhere from 25 to 35 times earnings, but they're also growing 30, 40, 50% in their cloud businesses. The only one that I would take profits in, as you know I have been, is Amazon, because that stock is going to struggle because they're not going to have operating leverage because they're spending so much money this year for good reason. I understand that, but as a stock price, or as a stock in general, I think it's going to underperform the other names. I love the cloud theme. I don't think that goes away. I think you're in the third or fourth inning there. I love security. So there are pockets in tech you still certainly want to be involved in, especially on the semiconductor side, because those stocks are still very cheap. On the cyclicality side, as I've mentioned, the energy sector is still off 36%. Financials are down 26%, and industrials are down 20% year to date. They represent value in my book if you believe the economy is going to gradually recover, and that's what I believe.
So Jim Lebenthal, is it the time right now to take some profits on growth and put some money into value? And you can define whatever individual stocks you deem as value stocks, but we generally know that the kinds of stocks that I'm talking about. Steph was talking about some of them too. Industrials and energy. We can talk about the financials in just a moment. I don't want to do that yet. We'll tease that ahead, and we'll do that in a moment. But how about the notion of taking some profits and having a higher concentration or at least higher exposure into some of those so-called value stocks?
The short answer is yes, Scott. And the key word that you're using there is some. You don't want to take all of your high flyers and get rid of them. They've been workhorses, and they should continue to do fine. But yes, you should take some of those profits and go into these stocks that I gave you the comparison earlier. Russell 1000 value versus Russell 1000 growth, 23 percentage points through 5 months of the year. You really think there aren't bargains there? There are. And here's the key thing, though. This is the most important point. What I'm saying is predicated on the belief, not the fact, because we don't know it yet, the belief that the second wave is not occurring right now. Maybe it occurs in the fall. Maybe it doesn't occur at all. I don't know. But until and unless you get a second wave of the virus, then yes, you should be recycling some of the profits from your high flyers into these value names because they're not going away. They're going to continue to appreciate until and unless you get a second wave of the virus.
Which high flyer of yours, Jim, would you do that in? Is there a name you can pull
look,
from
you know,
and say, I should do that now?
Sure. Look, Apple, I think, is a fabulous stock, and it's been a source of funds for me earlier this year in January. I sold it at $315. I mean, you look at where it is today, and it could be a source of funds for me. And I think the other question is, where do you go with it, right, Scott? So, I mean, I'll throw one name out at you, and you're going to say, well, geez, you haven't talked about that in a while. How about Viacom CBS? You know, if we continue with this reopening, sports are going to come back. I know you're waiting for that. I know how important sports are to you. And you know how important sports are to CBS. CBS Sports is the crown jewel of Viacom CBS. That's a place that you could put some money if you believe you're not on the cusp of a second wave of the virus.
Josh Brown, why don't you weigh in on this same idea and question?
So I took my initial cost out of Zoom shares last week for exactly the reason that everyone's discussing. It has been a workhorse. It was like 140% gain on the stock. I had been in it, months before coronavirus, and I held it through the entire thing. And now it's like, all right, I'll play with the house's money. From a valuation standpoint, obviously it's ridiculously overpriced, but it was when I bought it. So that's not really a good measure of whether or not to buy a stock. I know the textbooks say that, but it's not how it works in the real world. So I don't really love the value versus growth game. If I'm going to own an individual stock, that means I'm going to be overweight that stock relative to the index, relative to funds. And if I want to do that, it's because I think the stock is going up, not necessarily just because I think it's cheap. A lot of stuff can be cheap forever. So the way I'm thinking about my portfolio now is more tactically than strategically, and I'm not sitting here saying, is now the time to get out of growth and bet on value. I'm not saying that can't work. I'm saying people that have pursued that particular holy grail over the last 10 years have been losing their investors and closing their funds.
It's interesting, though, Josh, that today is a kind of day where it's not a stick with what's working market day. Right? The stocks that I mentioned to you at the top.
Netflix is down.
Yeah, Netflix is down. Yep. Apple was down. Microsoft was down. Amazon was down. And you mentioned some of the unbelievable bids you had in some of these names that just haven't gotten any love and have been worried about for so long now.
Yeah, look, I have value stocks in my portfolio. I don't own them because they're value stocks. I own them because I think they can go up. And I think when you get into the mindset of, look, it would be great to own a lot of value stocks because then you're buying cheap assets and you're doing the thing you're supposed to do, buy low, sell high. But wouldn't it be better to buy value stocks that either have some identifiable catalyst or have started to move up? Like a value stock with momentum, for me, is way more interesting than, look at this piece of garbage. It keeps falling. I'm gonna do a martingale strategy. I'm gonna buy it at 40, at 20. I'm gonna double down at 10. I'm gonna double. That's not my game. I know there are people that do that. I wish them luck. It's not for me.
Do you think of what's a good value stock that has some momentum? Can anybody throw one out? Steph, I think you're on the phone. Your shot went out, so we got you on the phone. How about a good value stock that has some momentum behind it?
Well, I mean, I have a laundry list of value names with some momentum to them. I would focus on the industrial side of things because those stocks have really gotten hit very, very hard. Union Pacific comes to mind because the company is doing all the right things in terms of their operating ratio coming down, and they're doing this precision scheduled railroading, which is just a fancy way to say that it's an efficiency program. And so they are actually doing all that they can. Their balance sheet is very strong. They have a good dividend yield. And if you get the auto production ramping up fully, that's going to help volumes. And so I think that that's a name that they're doing all the right things fundamentally. And then when the actual fundamentals turn, that stock should really take off.
All right, we're going to take a quick break. We'll come back. We've got bullish calls today on Southwest Airlines, J.B. Hunt, and some of the semi stocks as well. We'll debate those straight ahead, find out some other moves that our investment committee is making when we come back in 2 minutes.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
Wanna bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
Mr. Darren Waller, good to have you.
Yes, sir. It's good to be here.
Dana White, welcome to the Alumni Lounge.
Thanks for having me, brother.
Big member of our NFL alumni family, the CEO of the XFL, Mr. Oliver Luck.
Charlie, good to see you. Thanks for having me.
We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen.
Are you ready for the realest firsthand take of what's happening in the NBA? On their podcast, All the Smoke, former NBA players Matt Barnes and Steven Jackson bring their fiery intensity to the mic, dishing on the latest news and drama from on and off the court without boundaries.
Half man, half amazing. My friend, our brother, Vince Carter, man. Welcome to the show.
Yo, what's up, man?
What's up, my brother?
Man,
Search All the Smoke on TuneIn to listen. Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know.
All right, welcome back. You saw their strong day underway for stocks. Let's get to Sue Herrera now for news outside the stock market. Hi, Sue.
Hello, Scott. Hello, everyone. A bit of reopening progress to report. New Jersey's Governor Phil Murphy says professional sports teams can resume training and competing when their leagues are ready to do so safely. Murphy also says New Jersey schools will be able to hold in-person graduations starting July 6th. Specific guidelines will be released tomorrow.
Our goal is to ensure that our students are given the send-offs they richly deserve, in which they have been working toward. We want them to celebrate and to be celebrated by their families, friends, and the educators who helped get them there.
You can find more on state-level reopening efforts around the nation by going to CNBC.com. And Amtrak is requesting another $1.5 billion in federal funding to maintain minimum service levels. Amtrak says it is already taking measures to reduce its operating costs by $500 million, but it only expects ridership will return to 50% of normal in the next fiscal year. You are up to date, Scott. Back to you.
All right, Sue. We appreciate it. Thank you. That's Sue Herrera. Let's talk about some of these calls, guys. Jim Lebenthal, I'm coming to you first. Southwest Airlines, it's up big time today. Upgraded over at UBS. Price target goes to 41 from 37. I know you don't own Southwest. You do own Alaska. Yep. The mere fact that an airline gets upgraded is news in and of itself. You insert the name and it's a story.
Yeah, but, you know, Southwest is a little different. I mean, one key thing is they have net cash on the balance sheet. So, you know, look, the airlines clearly, Scott, are a speculative play, but there are places that you can be safer than the rest. Southwest is one of them. I like the risk return better in Alaska Airline, which basically has no net debt. And you compare that to, say, American Airlines. Look, American Airlines has $23 billion of net debt. That's going to $40 billion by the year end. I mean, look, it's a speculative play. I've already said that. It's based on the second wave of the virus not coming anytime soon. If that happens, all of these you got to get out of. But in the meantime, Alaska and Southwest, which has investment-grade credit ratings, are the right way to play the airline speculative trade.
So I want to talk about some chip stocks right now. Barclays' Stephanie Link has initiated Applied Materials, KLA Corp, and Lam Research. Lam Research gets initiated overweight. The price target there is $315. I bring that up first because that's the one you own out of the three.
I do, and I still like it a lot. It's not nearly as cheap as it once was at 19 times forward, but it still has lagged. It's down 7% on the year, and they will benefit from a recovery in the DRAM and NAND markets, which I expect to happen in the second half of the year. They're a leader in etch and deposition. They're taking market share. And now, oh, by the way, the third quarter wasn't as horrific as people thought. In fact, their gross margins and operating margins beat expectations. Strong balance sheet and very good cash flow from operations. So I still like that one. I don't think you have to buy it on a green day because it's very volatile, but I still like it very much.
How about some of these chip names, Josh?
KLA 10 Core is in the process of breaking out right now. This is a stock that, when the NASDAQ and all the chip names fell, printed a higher low than the low from 2018, which is what you want to see. It means the buyers were not patient enough to allow the stock to fall back to previous levels they had been able to buy it during prior market turmoil. They came in and they bought it higher. That's the first step. Step two, 180 to 182, right around where it's hovering. That's the trigger. I look at weekly closes. I'm not a day trader. So if I'm thinking about playing one of these names on a technical breakout, I want to see by the end of this week or the end of next week, I want to see the stock above that 182 prior resistance. And I think if it gets through there, you say to yourself, who is selling? Like, this isn't magic or the dark arts. There aren't people trapped in the name with losses above that level. It's blue sky. So I like it there. You could set a stop just below the breakout if you want to control risk a little bit. These are the types of chip names that I'm looking for right now. KLA fits the bill. Chip equipment, just as good as AMAT. Don't let anyone tell you otherwise.
All right, stock's getting a nice bump there as well. We're going to come back. Our experts are ready to answer your questions next in Ask Halftime, and you still have time to reach us. Go to CNBC.com/halftime. You can tweet us as well. And a reminder, you can always watch or listen to us live on the go on the CNBC app. We're back right after this.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities. Search sports and scroll down to the world of wrestling to listen.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
The right time with Bomani Jones. While he was gone, Al had some kind of vote to make him the managing. You remember he used to come up all the time in the Raiders game that he was the managing general partner. By the way, don't forget, there was a lot going on in Munich. You know how tired that man was to come back and find out that Al Davis had strong-armed his team from him while he was gone?
Search The Right Time with Bomani Jones to listen.
Get yours.
All right, let's answer some of your questions now. Stephanie Link, you are up first from Bob in Michigan. Should I hold, sell, or add to my position in VF Corp?
I would buy some more VF Corp at this level. The stock is down 40% year to date, trades at 18 times forward. I think those earnings are trough levels. You're getting a 3.3 yield. And that 3.3 yield is important because it's actually very well covered. They have $5 billion in cash. So that's a very big positive. Look, the quarter wasn't great. The guide really was bad, but digital is starting to really accelerate for them. U.S. stores are just beginning to start to open again, and China is now positive for them. So stay patient, nibble on the down days. That yield is one of the reasons you buy it, though.
Okay, Josh Brown, I have a question for you now, and it is from Joe in Dublin, Ohio. Should I sell Luckin Coffee at a fraction of what I paid or hold long term? I'm sure lots of investors have the same question as I look at the stock trading at $2, up 54%.
So this is my favorite part of like building off a small base we talked about earlier. It's up 54% today. Must be a huge winner. No, it was $50. It's $2. All right. Yeah, you should. If you don't know why you're in it anymore, other than the fact that you're down, you should probably sell it. I'm not saying it couldn't go back to 3 or 5 or 7. But I think this is how you pay your tuition to the market. This is how Jesse Livermore paid his tuition to the market 110 years ago, and you're no different. Everybody has to take losses to learn. I could tell you my own war stories of being wrong, but they won't mean anything to you. You were wrong here. You should own that. You should take the loss, and every time you go to do something else stupid, say to yourself, do I want to be back in that position, or should I think more about this? So I did it. I've been killed in stocks like this. I'm glad that you had a chance to learn this lesson. It won't be the worst thing that ever happens to you. Don't be upset about it.
Okay, Jim Lebenthal, to you from Barry in Worry, North Carolina. What is your outlook on Raytheon within the next year?
Yeah, so listen, there's a technical aspect to this, which is that the companies, Raytheon and United Technologies, just merged last month, which means they have yet to report a quarter as a merged company. The analyst community doesn't know what to do with that. They're sitting on the sidelines. Well, you know what? I do model my own estimates. I see a 10 times enterprise value to EBITDA multiple gets you to $80.80. And as you get to the back half of this year, the analysts are going to start coming out and crowing about it. I think this is an easy buy right here.
Okay, Michael Farr to you from Mario at the Real Rio 5. Can you name a cheap stock with high volatility or high dividend that can pay out nicely in the long run?
I think I could probably name 1,000 of them. The question is there anything out there you really want to own? Remember what Josh said earlier, buying something that's just down because it's down and looks cheap is not a good reason to buy it. Buy something where there's some there. I'm going to go back to my pick on Valmont. It's an infrastructure company. They make light poles and utility poles. Any infrastructure spending bill benefits the stock's 14 times earnings, has a little bit of a dividend. I think you can make some money there. Don't go too far out into the thin branches when the market's trading 10% off its all-time high. Be careful.
All right, we'll go quickly through round 2. Stephanie Link, Bristol Myers from Srini in Pittsburgh, Pennsylvania. What do you do now?
I like it. I own it. I would hold it for the 3% yield, but I prefer AbbVie. It's much cheaper and has a 5% yield.
Josh, Douglas in California. I'm looking for exposure to the healthcare sector without single stock risk. Thoughts about the XLV versus the IBB or the XBI?
I own IBB and XBI. IBB is already broken out.
Life isn't always easy at the moment. We can feel frustrated, miss loved ones, or get anxious. But there are simple things we can all do to look after our mental well-being at this time. Every Mind Matters will get you started with personal.
For men, with a month of food and shakes delivered to your door. Stay home, stay safe.
Nutrisystem comes right to my door. I don't have to think about it. This is breakfast, this is snack, this is lunch, this is dinner.
Nutrisystem for men has got you covered to stock up the pantry and help you stay healthy. Act now and save 50% off a month of food and 50% off a month of shakes.
Go online or call 888-478-FIT3 to save 50% on a month of food and shakes.
Online dating? I know people meet that way, but where would I even begin?
Open laptop, go to OurTime.com, look for free. It's easy to take a look on Our Time, the fastest growing dating site for people over 50.
Welcome back. Let's get the very latest in the coronavirus pandemic. Over to Sue Herrera for our headlines. Hi, Sue.
Hello, Kelly. Hello, everyone. Here's what's happening. St. Louis Mayor Lydia Crewson is joining a group of Missouri officials calling on the Lake of the Ozarks Memorial Day partiers to self-quarantine for 14 days after ignoring social distancing guidelines over the weekend. Images of a jam-packed pool party in the region led county officials to issue a travel advisory and urge local employers to screen workers. Sweden is defending its virus response and rejecting a mortality measurement that shows it as having one of the highest death rates in the entire world. The country has faced criticism for its more lenient approach to the outbreak, which allowed restaurants and some schools to remain open. And dentists are considering using UV light technology to safely reopen their practices. Ultraviolet light is already widely used as a disinfectant in hospitals and larger medical facilities. There's more on that at CNBC.com. Kel, back to you.
Such a hassle going back for a lot of these even routine appointments now.
Absolutely.
Sue, thanks very much. Sue Herrera. The shift to remote work is also creating new tax headaches for both companies and their employees. Of course it is. Elon Moy joins me now with those important details. Elon?
Well, Kelly, working from home can lead to double the tax trouble. And that's because for employees, where you pay state income tax depends on where you work, not on where you live. And for a lot of people, those are two very different places. For example, you might work in Englewood Cliffs, New Jersey, but live in New York City. Now, right now, we're all working from home. And so that means that technically, New York would have the right to tax all of the income that you earned while you were logging in from your basement, trapped in your husband's man cave, and wearing your bathrobe. And Governor Andrew Cuomo has even signaled that he does intend to go after every single one of those dollars as he tries to close the state's massive budget shortfall. Now, for businesses, having a remote workforce spread across the country means they could face corporate income tax in all of those states, even if they don't normally do business there. So the question is whether having one remote worker could constitute nexus for the state to start imposing taxes. Now, of course, Kelly, there has been legislation proposed on Capitol Hill to address all of these issues. No movement on them yet, but perhaps the pandemic could change that dynamic.
You know, this was going to be memorable anyway, but especially with the bathrobe. Thank you very much.
It's very cozy.
Yeah, I can imagine. I could use one. Elon Moy, we appreciate it. And check with your employer, everybody. Coming up, another streaming service hits the screen with HBO Max launching, but with the highest price tag, tons of competition, production stoppages, and states reopening. Is the launch ill-timed? We're going to speak with the man in charge of that product ahead. Plus, some staggering new housing numbers that suggest the recovery is closer than we think. We'll have the latest. And take a look at the casino stocks, seeing a nice rally today. Gains of 7 to almost 10% in the case of Melco. The Nevada Gaming Board meeting today to lay out protocols for reopening them. Nevada's governor is pushing for next week. Stay with us.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search Classic Game Replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL Show, where a rotating cast of Ringer experts talk with insurance.
AT&T's incoming CEO talks first on CNBC on the day of its highly anticipated streaming launch. John Stankey on HBO Max and the environment for media and telecom on Squawk Box. Watch and listen live on the CNBC app.
Welcome back to the exchange. Dow's up 670 points right now. Also, by far the outperformer of the major averages. Let's go over to Dom, too, for a check on that and some more. Dom?
All right, so Kelly, the bulls are in charge, at least for now, with the Dow, the S&P, and NASDAQ, as you can see here, up about 1 to almost 3% overall. Now, for the Dow, it's up nearly 40% since those lows that we saw back on March 23rd. If you look at the S&P 500, it's now above its longer-term trend line right now. You can see there that 200-day average price that sits right at 3,000, sitting at 3,013 in real time. Financials, industrials, energy, as you can see, leading the way higher. Meanwhile, you've got consumer staples, technology, and healthcare, the relative laggards so far today. Now, a few of the stocks you'll want to watch, follow me over here, include Citizens Financial, which is one of those regional banks that's leading the financials higher, some of that incremental optimism and slightly more constructive interest rate environment helping there. Then you've got oil and gas companies like Chevron, up big here, also catching that same lockdown easing tailwind as oil prices rise on prospects for more fuel demand. And then we're going to end on airlines like American Airlines, up as well as travel and leisure companies try to work their way back off very depressed levels. Remember, there was a time, Kelly, when we used to say rising oil prices were bad for airlines, but a rising tide lifts all boats. Back over to you.
Yeah, everything's different these days, Dom. Thanks very much. America is still waiting for the return of baseball. So far, there's a proposal for an 82-game season starting in July with no fans. The players have yet to sign off on it, though. Even if there's half a season, the financial damage has been done for many teams. The Chicago Cubs are estimated to lose at least $100 million this season, even with half a season, if no fans. Here to talk about the path forward for sports and baseball is Tom Ricketts, the chairman and co-owner of the Chicago Cubs, and he joins us from Wrigley Field, and it is great to have you, sir. Welcome.
It's good to be here. As you can see, Wrigley Field is not quite being used what we expected to use it for this year. Instead of playing the Marlins tonight, we have turned the ballpark into the largest food pantry in Chicago with our partners at Lakeview Pantry.
Yeah, which is fantastic. We hear so much about food insecurity right now. The lines for some of these food pantries have been insane. So at least that, gives an important community function in the meantime. And then everybody, Tom, is saying, when can we expect to be back in the stadium for ball games? Or can fans expect at all to be back in the stadium this year? Will there be games? What are the players going to accept? I mean, there are some big stumbling blocks here.
Yeah, there's a lot of questions. I think everyone is intent on getting baseball back on the field, even if it is without fans. But there's a lot that goes into that. I mean, first and foremost is the safety of the players and the other people that need to be in the park during the games, even if there aren't fans. And the league has put together a very thorough safety protocol, 67 pages. It's being reviewed by the teams. It's being reviewed by the players' union. Hopefully, that will get to the point that everyone is comfortable with it and comfortable that we have a safe work environment. Hopefully, that will be enough to get each of the local jurisdictions, the different states or cities, to sign off, so that so everyone will feel like it's a safe enough place for our players and personnel to go. And then we have to, work through the finances of it all.
Right, and that's going to be tricky because the economics are super interesting here. I mean, if 70% of the revenues, in some cases, I think like yours, come from game day sales, and now all of a sudden you're not going to have fans. Well, if you play those games, don't get that revenue, and have to pay the players, you're going to be in a huge hole. So are you trying to figure out a way to pay the players, a lower percentage, maybe, something to say, hey, we appreciate you are here, or does it have to? Are they saying no? It has to be 100% for us to show up. I mean, this gets really interesting.
Well, that is the discussion. I mean, ultimately, the league as a whole is looking at about $4 billion of losses, and that's particularly hard on teams like the Cubs. As you say, we do get 70% of our revenue from tickets, parking, concessions, game day activities, and only about 30% of our revenue from media. And that's only part of that is national media, so like the local television that we do. Now, we've already lost half that season. So in a best case scenario, we're looking at recovering maybe 20% of our total income. So that is where the rub is, and that's where the discussions will go with the players over the next few weeks.
My question is, would you even want a season under those conditions, or would it be better for you to say, you know what, this year Wrigley Field is a food pantry?
Well, hopefully it can be a no-fan ballpark and a food pantry at the same time. But we'll have to see how it goes. But we'd definitely like to see baseball back. We'd like to see the team back on the field. I know the players want to play. I know the manager wants to manage, and I know even if it's on television only, I think people want to see baseball back.
What would you say in terms of what some of the other sports are considering? The NBA is reportedly looking at maybe putting everybody in Disney, kind of the bubble, or what are they calling it, the campus experience. I think baseball has been looking at maybe some regional opportunities to sort of clusters where people they're only allowed, I think, to take the bus back and forth. There's no locker rooms. I mean, behind the scenes, this would be a very, very different experience.
Well, the NBA and the NHL have a totally different set of facts. I mean, they got through about 80% of their season. So, they can finish up with a tournament or just play some games in one location to kind of wrap that up. We're very different. We didn't even start. So, I mean, the financial impact on baseball is even more dramatic than on the other sports. But as you talk about the schedule, I think the league is being thoughtful and creative about ways to get us playing again with schedules that maybe involve a little less travel. But we want to play in our own ballparks. We don't want to play in a tournament setting like the NHL or NBA are looking at. So, but hopefully those discussions are ongoing, and hopefully pretty soon we'll have some resolution on that.
What would you say, just kind of best guess, is that we have a baseball season this year and that we have it as soon as even July 4th? I mean, is that out of the question?
No, it's not out of the question at all. It really comes down to how quickly and efficiently the league and the union can get together and kind of hack through the issues.
Right, and how much maybe the players are willing to accept to show up and so on and so forth. Well, we know the damage.
Certainly one of the issues, yeah.
Yeah, and the financial losses, I know you guys, those are going to be issues for another year, but they're certainly going to be a big headache. Tom, thanks very much for joining me today. Good luck with it, and thanks at least for doing what you're doing in the meantime, serving the community. We appreciate it.
All right, thanks, Kelly.
Tom Ricketts is the chairman and co-owner of the Chicago Cubs. Coming up on Power Lunch, billionaire Tillman Fertitta. 270 of his restaurants are open, 2 casinos, his pulse check on the economy, and we'll ask him about plans for the basketball season are coming up. Coming up, HBO Max debuts tomorrow. It's the most expensive streaming service to hit the market and is entering an already very crowded field. We'll talk to the owner, Warner Entertainment, and direct-to-consumer chairman Bob Greenblatt about timing, content, and competition. Next.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying
to standout stations and podcasts. Stay in touch with TuneIn.
It's TuneIn Sports on this day. On this day in 1993, Carlos Martinez famously hits a ball off Jose Canseco's head for a home run.
High fly ball, right field deep. Canseco back to the track, looking up. It is off his head, it looked like. And over the top, a home run. That looked like it hit Canseco over the top of the head. We'll have to check the replay.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap.
Welcome back. Stocks are soaring today and have been lately on optimism about potential coronavirus vaccines and on the reopening front. The Dow's up more than 2%. The S&P climbing back above 3,000 for the first time since March. Is this a signal that a V-shaped recovery is still possible? Joining me now is Michael Darda, chief economist and macro strategist at MKM Partners. Michael, welcome.
Thanks for having me.
I feel bad because this was such an out of consensus view a couple weeks ago. And I feel like by the time we're having this discussion today, don't you think it's almost become more of people don't think you're as crazy as they once did, I bet.
Well, we'll see about that. Certainly, the market has been making a V pattern upward, and there's been a tremendous amount of skepticism about that. But we're just starting now to see some evidence in the data turning. Obviously, you've been reporting on some better than expected housing numbers, but we're seeing it in other places too. As reopenings get underway in virtually all states now, we're starting to see activity bounce off of very low levels.
Yeah, and there's something I think fundamentally that you use to explain all this that people really need to know about, which is if you look at this from the monetarist point of view and compare it with what happened in 2008, back then all the Fed's efforts didn't really get M2 or other money supply measures growing much. This time around, they are having more traction. To you, does that say not only is a V-shaped recovery possible, but I'm curious what you would say this tells us about what it might look like after that. Are we still going to have a weak economy for the next 2 years?
Well, I sure hope not. It does appear that the Fed is getting more traction this time than at least in the opening innings of the crisis response during 2008. So if you remember the back half of 2008, the Fed's balance sheet went up by 2.5-fold, yet broad money measures were barely moving forward, 4 or 5% growth. This year, the Fed's balance sheet's up about 70%, but these broad liquidity measures are up about 20%. So this is much more bang for the buck than what we saw last time. Now, the velocity of money is still depressed. That's the story of low market interest rates. We have a sudden and dramatic collapse in the economy that's taken shape, but the recovery off of this collapse should be much more vigorous than the recoveries after the last 3 recessions. And I think that's what a lot of commentators seem to be keying off is the slow recoveries after the last several downturns. Probably not a good model for the upswing that's in front of us.
Final question. How do the models kind of incorporate the idea that there's going to be a ton of debt on the corporate side to get through coronavirus and that repaying that debt means they're not investing, they're not growing profits the way that they once were, that itself slows down the recovery in the future?
Yeah, I think that would be a bigger risk if the policy response weren't so aggressive. And, the nature of this shock is different as well. The shock was not the result of corporate debt levels being high. The shock was a result of a pandemic and shutdowns as a way to deal with the pandemic. And so I think the debt levels are a concern, but they will not prevent this economy from starting to revive. This is probably going to go down as the shortest recession in U.S. history, also the sharpest. So I'm not trying to downplay it, but the peak to trough downturn is probably going to end up totaling 4 or 5 months, shortest in history.
Yeah, and as you said, the S&P can maybe go up to 3,400 range from where we are now. Again, this was an even more out of consensus view when you first published it a couple of weeks ago. Mike, thanks so much for joining me to discuss it. Michael Darda is chief economist at MKM Partners. Up next, another streaming service hits the TV screen tomorrow amid a lot of competition and at a hefty price. We're going to speak with the man debuting HBO Max next. As we head to break, check out shares of Facebook on pace for its 8th straight day of trading gains. That's the longest winning streak for Facebook since September of 2015. The shares have added over 20%, or just about 20%, over the past 3 months, as investors are optimistic about stabilization in advertising, up about 0.5%, extending that streak today. We're back in a couple.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search Classic Game Replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best news stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
The Mina Kimes Show podcast.
Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now, they should not extend you. So many teams, Jets, do not have the information they need to evaluate their quarterbacks based on the teams they built around. The Bills do.
Listen and subscribe to the Mina Kimes Show podcast.
Search the Mina Kimes Show to listen.
Welcome back to The Exchange. Tomorrow, another streaming service joins an already crowded marketplace, HBO Max making its debut. And from content to timing to its higher price tag, there are some challenges. For more, I'm joined by Julia Borson along with Bob Greenblatt. He is the chairman of Warner Media Entertainment and direct-to-consumer. Julia?
Thanks so much, Kelly. And Bob Greenblatt, thank you so much for joining us today, just the day ahead of HBO Max launching.
Yes, nice to be here. So happy to be here.
So, Bob, this is quite intense timing for you to launch a new service. It's more expensive than Netflix's most popular service. You're launching with just about a half dozen original shows. And we're also seeing sports start to come back with the promise of more sports coming back. Are you concerned that consumers won't want to pay for yet another streaming service right now?
Actually, to the contrary, I think we are feeling really good about what we have to offer. We have this incredible array of programming, not only new originals, but we have the entire HBO service. We have these deep libraries through Warner Brothers. We have third-party acquisitions, the Studio Ghibli library, the BBC library. We have so many things to offer. We really think this is, a great proposition, and we're a little late to the game, but no time like the present.
Well, you are a little bit late to the game. Of course, we have Disney Plus has already over 50 million paying subscribers, and you're coming to market at a time when we're entering a recession. A lot of people are unemployed right now. Are you concerned about that price point and the fact that there are so many streaming services out there?
Of course, we're always going to be a little concerned, and we didn't expect this pandemic to be, hitting us at this moment in time. But we also really feel good about where HBO has been in this marketplace for so long at this price point. And what we're really giving people is all of the HBO service, but twice the content with all this new additional content. And so we feel good about the price point, and also the fact that people are wanting to consume more content now, being home and sort of being in this situation that we're in. So again, we're feeling pretty bullish on the whole thing.
Now, Bob, you have talked about how there is an ad-supported version that's in the works. A lot of talk about this maybe being something that launches next year. Where does that stand now? Are you trying to accelerate the launch of an ad-supported version so you could have something lower cost on the market?
I think we're looking at that market very closely because, of course, it is good to offer the consumer a lower price point. I think it's going to take us the better part of a year to get those plans together. And, we've always felt that certainly the HBO content exists in an ad-free environment. And to go that way initially, was the right strategy for us. But I think you'll find something like that down the road. Just don't have, the entire plan put together yet.
Now, in terms of the productions being impacted by COVID, there's been stoppages of productions around the world right now. We're starting to see them happen again, but production stoppages have impacted your content pipeline. How much do you think we'll see that impact on the kinds of content that you'll be able to introduce within the first couple of months? And when do you expect to be able to start production again?
Well, you won't see any real impact in the first couple of months. In fact, we're in pretty good shape through the rest of the summer and into the early fall. The shows that you might see impact on, we would have been putting into production now for debut in the service later in the calendar year and into the first quarter of the next year. Look, we're in the same boat with everyone and hoping we can get shows back into production sooner than later. We have so many people working on that front. The most important thing is safety, and we have to bring so many people together to a set in order to get one of these things up and running. And I think it's going to be well into the fall before we get most of them back on their feet. But there are some things that we're able to do between now and then, different kinds of shows that are shot, a little bit more in the home, or we just picked up the show with Selena Gomez and her grandparents and a cooking show, which she's been doing during, this COVID situation. We can probably put that show into production pretty easily, but getting these hundreds of people to the sets is really the most important thing, and safety and doing it right is the most important.
Well, certainly a fascinating time for the industry. I wish we could talk more, but we'll have to have you back on to hear about how this launch goes. Bob Greenblatt, Chief of HBO Max on the eve of that service's launch. Thank you so much for joining us today. Kelly, back over to you.
And Julie, our thanks to you and to Mr. Greenblatt as well. We appreciate it. Coming up, April home sales coming in way better than expected as people were out house hunting despite most states being on lockdown. We'll dig into the surprising numbers. And coming up on Power Lunch, the CEO of Winnebago, Michael Happy, joins us to discuss the surge in RV stocks as investors bet on a summer full of road trips. Don't miss it. The Exchange will be right back.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Brian Windhorst and the Hoop Collective Podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective.
Search the Hoop Collective to listen.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunningham to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
It's TuneIn Sports on this day. On this day in 1993, Carlos Martinez famously hits a ball off Jose Canseco's head for a home run.
High fly ball, right field deep. Canseco back to the track, looking up. It is off his head, it looked like. And over the top, a home run. That looked like it hit Canseco to the top of the head. We'll have to check the replay.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Welcome back. The home builder stocks getting a little boost from today's positive housing data, but it was a big boost in the numbers. Sales of newly built homes were far better than expected in April. Let's get to Diana Olick in Washington with the numbers for us. Diana?
Yeah, Kelly, new home sales actually came in with a slight gain in April, almost 1%. That may not seem like a lot, but the expectation was for a 22% drop. So while sales were still lower than a year ago, that was a huge surprise to the upside. In addition, we also saw a big price drop, part of which may have been due to the mix of homes selling. The strength was really in homes priced below $300,000. Also, sales were weakest in the West, which is the priciest region. Now, another help, a big drop in mortgage rates after they spiked in March. These sales numbers represent signed contracts, so people out shopping in April when rates were falling and giving buyers more purchasing power. Some are saying this is just more evidence of urban flight, that is the need for more space, especially outdoor space, as so many people continue to shelter at home. Kelly?
We got a bidding war breaking out down the street now, Diana. It's crazy.
Yeah, the bidding war numbers are going up, the competition is high, and the supply is low, and that's why the builders are seeing such demand.
Yeah, you can tell people who just want to get out in a hurry, leaving those cities. Diana, thanks so much. Diana Olick with the latest for us. Well, that does it for the exchange today. I will join Melissa Lee over for Power Lunch, which starts right now.
And we'll see you in just a moment, Kelly. I'm Melissa Lee. Our coverage of today's big market rally continues right now on Power Lunch. The major averages near the highs of the day. The Dow up about 700 points, crossing above 25,000. The Nasdaq just 4% away from record highs. Progress in the coronavirus vaccine and optimism on reopening the economy driving this action today. We've got two big interviews this hour to dig deeper into the economic fallout and recovery. Billionaire Tillman Fertitta with 270 restaurants open for business, and the CEO of Winnebago, as RV sales have soared 170% during this pandemic. Power Lunch starts right now.
Melissa, thanks. Let's get more on the markets, the comeback, and so much more. After last week's rally, the S&P is up now 37% from the March lows. There's your chart. 3,013 is the trading level right now. We're close to session highs. Let's get to Bob Bassani for more. Bob?
And Kelly, more importantly, besides 37% rally, we're only 11% from the old historic high. That was February 19th of this year. The S&P 500 is the key to watch here. We're over 3,000. That's psychologically important, but even more important, we're over the 200-day moving average for the first time since early March. So there is a breakout occurring here, and it's the right kind of stuff that you want to look at right now. It's the stuff that has been lagging for a while. We're seeing breaking out. So transports, highest level since early March. Those are largely airlines that are doing well. Russell 2000, another laggard. Highest level since early March. Again, same situation. Same situation with retail. XRT, highest level since early March. The banks are trying to break out. They're looking like they want to, but there's not any technical breakouts, but still great numbers overall today. And for once, mega cap is not a major contributor, a modest contributor to it. Google up, Facebook's at a new high right now. Microsoft not doing anything today and really has been stuck in the low 180s for several weeks now, frankly, here. We are getting some new highs, but not a lot. I'd like to see some breakouts really in new highs. Not really there, but a lot of these stay-at-home stocks like Facebook, as I mentioned, eBay, Nvidia, PayPal, also sitting at 52-week highs. And finally, for everybody keeps messaging me, this doesn't make sense, Bob. Why are we rallying so much? I'm afraid it does. If you look at the things that move the markets, the three main buckets, reopening is broadening out, number one. Number two, the vaccine. We've had Merck and Novavax advances, or at least optimism today. And finally, McConnell's on stimulus, talking about a fifth relief package coming. And of course, we did get, guys, better economic news today with home sales and consumer confidence. So it may be overvalued, but it's not insane why the market is rallying today. It does make some sense. Guys, back to you.
All right, Bob. Thank you, Bob Pisani. As mentioned, two big steps being made on the vaccine front to help fuel the market rally today. Our Meg Terrell has more on that. Meg?
Hi, Kelly. Well, we heard from one of the biggest players in infectious disease and with the most experience in vaccine development, and that's Merck, announcing 3 different deals today in the COVID-19 space. One with Ridgeback Bio to develop an antiviral drug for COVID-19. This would be a pill that could potentially be helpful, although it is only in early studies and it needs to be taken through to make sure it's both safe and effective. Second, the company announced a vaccine partnership with a nonprofit called IAVI, which plans to start human trials later this year with support from BARDA, the U.S. government, and that's pursuing a similar technology that they pursued for their Ebola vaccine, which just got approval. Finally, a third deal to acquire a company called Themis, which is privately held. That's another vaccine approach to COVID-19, planned to start human trials in just a couple weeks. Now, to put all of this into context, Merck is approaching the clinic to human trials as several other companies are already in human studies. Of course, we also heard from Novavax this morning that it just started human trials in Australia. And you can see those in the blue there on the left are ones that are already in human trials, and those on the right are the ones planned to start later this year. But Kelly, just to put all of this into perspective, we are at the beginning of the vaccine development. And we're going to see over the next few months how these vaccines do. And history would suggest to us that they are not all going to work. There is a low probability of success in clinical development when you're just at the beginning. So we hope they're all going to work. But as there is so much optimism, we have to be realistic as well that not every project will succeed.
Yeah, and I know Novavax investors say they've been burned before on maybe an Ebola vaccine that didn't pan out. On Moderna, obviously, we've talked a lot about how that was based on 8 people and the company did a secondary. So it's interesting, Meg, to me, it almost seems like this is just the market looking for more excuses to rally. I guess the jury remains out on whether either of those two companies or any of the others that we've talked about are able to actually come to market with this vaccine.
That question is going to be out there until we actually see one of these vaccines succeed in a phase 3 trial. But when you are looking at the space, there are companies that have proven track records, and Merck certainly is one of them. And they have 2 vaccines that they're trying to take through clinical development. So, it's an open question, though, until we see the results of the trials.
Yep. Exactly. A little ways to go still. Meg, thanks so much. Love the new shot, by the way. Looking good. That's our Meg Terrell. Speaking of coronavirus treatments, make sure to watch Closing Bell today. 4 p.m., they will have an exclusive interview with Merck CEO Ken Frazier about the company's push to develop a vaccine. Melissa?
Kelly, our next guest made a bold call when he joined us back on April 2nd, calling for economic shockwave from the coronavirus fallout, which could lead stocks into a very drawn-out bear market. Those are his words. But that so far has not panned out. In fact, check out the averages since that day. The Dow's up about 20%, S&P up 22%, the NASDAQ up a whopping 28%. So what now? We're joined by Mark Yusko. He's the CEO and Chief Investment Officer of Morgan Creek Capital Management. Mark, great to speak with you.
Hey, Melissa, thanks for having me back.
Do you pull that forecast, or do you say we haven't had enough time for this to pan out?
Oh, not at all. Look, I think what's kind of lost in all of this rally discussion is the market's still down right around 8-9% for the year. And the things that have rallied more than the S&P are the things that were actually cheap going into that period in April. So, things like gold mining stocks are up much more than the S&P. Bonds are actually up 20% year to date with the stock market down 7-8%. So I think things are still really overvalued. They've been overvalued for a while. All of the gain recently is just multiple expansion. Earnings are collapsing. Economic data is actually pretty awful, despite the little uptick in new home sales. But I think the worst is really yet to come.
What is going to propel us in terms of reaching the forecast that you say? I'm asking because the market's obviously a forward-looking instrument. So are we looking through this? We know that the rest of this year, you look through the earnings. We don't have visibility, but you look out to 2021, and maybe that's what the markets are buying right now. We look out to the fact that a vaccine may be on the horizon, and that's why we're rallying right now.
Well, again, I think it's true. And you and I have been talking about this actually for the better part of 2 years. And, the S&P is dead money for the last 2 years. It's had no gain really since the end of January 2018. And that's because it is a forward-looking discounting mechanism. And things are getting worse, not better. The rebound that's being forecast for earnings is almost comical given, as you said, right, there's no visibility. Most companies pulling any forward statements on earnings visibility. So, we'll be lucky to make $100 or $110 this year. I think consensus is still at 125. That pushes the forward PE to levels we've actually never seen, worse than 2000. So very dangerous markets. And look, David Tepper and Stan Druckenmiller both said the risk reward here is horrible.
For every one of those guys, though, Mark, you got a guy on the other side. So I'm asking you, with this position in mind, Mark, do you short the markets here? I mean, how are you positioned?
Yeah, we run a long short hybrid fund, which is about half the money is external with external managers and half the money we run with the best ideas portfolio. That runs around 40% net exposed to the market. So we're certainly long things. We like what's going on in China, for example. We think China tech stocks are actually a really good play despite all of the Cold War 2.0 rhetoric. We really do like what's going on in some of the value sectors, and we think value will outperform dramatically. We have 2 value managers that are up high double digits this year.
Value like what?
Down a lot.
Like banks, like industrials, like what?
Not banks. Look, I think ZIRP and NIRP, zero interest rate policy and negative interest rate policy is pretty bad for banks. And banks are down in the high 30% this year. They looked okay today, a little short covering, but we don't really like finance. So it's more industrials and cyclicals that have been beaten down. Energy is one of our favorite spots. We think some of the energy services companies are quite interesting, Halliburton, Schlumberger. And look, there's so much concentration in the market, right? They should call it the S&P 5. Forget the S&P 500. All of the gains are really in the FANG stocks. And we think that FANG, Diamondback Energy, will outperform FANG, Facebook, Amazon, Netflix, Google. And my new FANG is FAAANG, which are the 6 gold mining stocks that we think will do much, much better than all of those.
All right. Sounds like you got another prediction we'll have to check up on. Mark, thanks for your time. Appreciate it.
Oh, thanks for having me. Good to see you again.
Mark Yusko.
Let's get to the bond market now, where Treasury yields are jumping. Rick Santelli is tracking the action at the CME. Rick?
Yes, if you look down the curve, they're definitely jumping. They're not necessarily jumping in the front of the curve, though. Look at a month-to-date of 2-year note yields, and do keep in mind, every settlement so far in May has been between 19 and 14 basis points. Very tight range, but solid. The auction today was average. If I look at an intra of 20-year further down the curve, that's exactly what Kelly's talking about. That rather new debt instrument that reemerged is up 8 basis points as it trades 120. And a month-to-date of the dollar index, well, it's not doing very well. As the rest of the world does better and equities do better, the dollar seems to be slipping away. That actually makes perfect sense if you've been watching the strength it had in March. And finally, a month today to the dollar versus the yuan. It might be doing not well against the other majors like the pound or the euro, but it's doing great against the yuan. It's at the best level since September. Kelly? Tyler, back to you.
Thank you, Rick. Still ahead, we're going to have more on today's big rally. The financials, industrials, and real estate all leading the way. Financials up more than 4%, believe it or not. We'll have more on that. Plus, RV sales are surging amid the coronavirus pandemic as Americans look for different ways to travel this summer. Avoid those hotels. Shares of Winnebago are benefiting, up 50% in the past month. The CEO will be here with more. Power Lunch continues after this.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala. He scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen. Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and
Many people are concerned about flying on planes and staying in hotels. So will they turn to RVs for summer fun? The stock market seems to think so. Winnebago and Thor have both nearly doubled in the past 2 months, and Camping World tripled. Let's get to Frank Holland for more on this. Frank.
Hey there, Melissa. You know, the largest independent RV dealer in the U.S., the Route 66 network, they say searches on the site are surging 50% higher year over year this month as states begin to reopen. It's really an encouraging sign for an industry that saw gains in January and February, but then steep declines in March and April, leaving shipments on pace for a third consecutive year of lower sales. However, investors, they appear to see a potential for a turnaround for RVs. Leading manufacturers Thor and Winnebago have seen their shares far outperform the market over the last 2 months. Camping World, the nation's largest RV dealer, improving by more than 200%. Thompson Research Group and other analysts say there is potential for an RV rebound that's comparable to after 9/11, where it took about 22 months for air traffic to return to previous levels. And RVs, well, they appear to benefit. In 2002, sales jumped 21% year over year. Other macro factors are also favorable compared to 2017. That's the all-time year for RV shipments. Gas prices are just about 20% lower, and interest rates, including the 10-year benchmark, are near record lows. Back over to you.
All right, Frank, thank you. As demand for RVs soars, let's check in with someone on the front lines who runs one of these companies. Joining us now for a Power Lunch exclusive is Michael Happy, the CEO and president of Winnebago Industries. Michael, it's great to have you. Welcome.
Yeah, thanks for having me.
Can you keep up with the demand, first of all, in terms of production? Because I imagine your workforce is also affected by stay-at-home, social distancing, and so forth.
Well, first of all, the safety of our employees is certainly our number one priority, and we have the appropriate protocol in place as they've returned to work this month to make sure that they can work safely and help us meet the rising demand that you just referenced. We have confidence that we can continue to keep up with demand here over the summer months, and we'll work closely with our suppliers and our dealers to do so.
What can you tell us about the features people are looking for, maybe the places that they're looking to travel with RVs, especially if this is a lot of people who are first time, maybe they are, maybe they aren't. I don't know if you can kind of glean anything about where this demand for RVing is coming from and what people are looking for.
Well, I think we're seeing a mix of demand in the outdoor recreation industries right now. And certainly there are a number of first-time buyers who are interested in using recreational vehicles to get outdoors. But I also think we're seeing a number of people who have been in the lifestyle for a while that maybe want to upgrade or look at something new as well. Obviously what's driving this are, people are coming out of the stay-at-home or shelter-in-place restrictions that were put on in the month of April and early May, and they want to socially distance in a safe but yet memorable way with close friends and family. And so they are looking to the outdoors, especially as the weather gets better around the country. And RVing and boating, two industries that we have a presence in, are both becoming increasingly popular here as this summer begins.
Michael, of your customer base, do many people seek financing, and is it becoming more challenging for people to qualify for that financing given people losing their jobs, people being asked to take pay cuts, et cetera?
Yeah, there is a fair percentage of the consumers that do choose to finance the purchase of the products at retail. And we have been generally pleased that the retail financing environment has been stable in the last 4 to 6 weeks. And while certainly those companies that offer that lending are being very detailed in who they lend to, we're not seeing a significant deterioration in credit scores yet at this time, but we are seeing the retail finance companies do their homework to make sure that that those consumers who do apply and get approved for that financing are creditworthy going forward.
I wonder, Michael, as people, to some extent, have we pulled forward a couple of years worth of demand for RVs, or do you think we're creating a new kind of class of people who will continue to use RVs going forward? And I'm thinking about it as an investor, where on the one hand, if we've kind of just pulled it forward, I'd want to sell your stock as things start to reopen and people trust the hotels again. If this is kind of a new normal, then I could maybe see the case for a higher valuation and higher sales.
Well, I think it's a combination of many of the things that you just listed there. You have to remember that beginning in really the third week of March through almost the entire month of April, our industry sales were down much lower, obviously, than they were in previous years. So we believe there was some pent-up demand in terms of retail in this particular time in May and now going into June. We've referenced a newcomers, first-time buyers to the space, and possibly there were some people that were maybe thinking about making the investment later this year that are pulling it ahead. But, in fact, I think there is going to be a new normal that emerges here, at least for a little while, maybe for the next year or two, as people are generally less comfortable with flying on airplanes, getting on cruise ships, or staying in hotel rooms. Again, they view RVs and boating as fun, safe ways to control their environment in the outdoors and still have extraordinary experiences with family and friends.
It seems like a big investment, Michael, to make, though, if you're a little bit concerned about traveling in the near term. It almost seems like a prediction that you're making about the future. I mean, one makes about the future if they're actually investing in an RV because they don't want to get on a plane and they don't want to stay in a hotel room. So how do you think about that? How do you think about that sort of demand lasting? Because with that sort of outlook by your customer comes the economic uncertainty that would exist out there because the pandemic is still around.
Yeah, a couple thoughts there. Even before the pandemic crisis, hit our country and really the world, the RV lifestyle was becoming even more popular than it ever has been. And part of that reason is because the use cases of the RVs have just continued to exponentially grow. I mean, you can literally work within these RVs as a mobile worker. You can tailgate with them. You can be a soccer mom with a club soccer team, or you can use them to go to the national parks or certainly, maybe to the warm weather states. But the reality is that I do think that this lifestyle will continue to be popular going forward. But we're also aware enough of some of the difficult economic conditions that we face in the future, with unemployment numbers being higher than they have been generally. And we'll be watching that very carefully here over the summer and early fall to see if some of the economic headwinds begin to press back on some of the positive factors that we're seeing driving demand currently. But long term, guys, I am extremely bullish that the RV lifestyle, the boating lifestyle, will continue to become more popular as people want to reconnect again in the outdoors with their family and friends.
WFRV, work from RV. That's a new thing, Michael. We got to look into that. Thanks so much for your time. We appreciate it.
Yeah, thank you.
Michael Happy of Winnebago. Still ahead, airlines surging back today, but the big names still down 40% or more this year. The traders will tell us how they are playing these moves. Plus, billionaire Tillman Fertitta has 270 restaurants open. And in 2 states, he is actually seeing more customers than he saw this time last year. He'll be here to explain why. Much more Power Lunch right after this.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. With the NHL season temporarily on ice, now is a good time to catch up on past games. With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala. He scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
Brian Windhorst and the Hoop Collective Podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective. Search the Hoop Collective to listen.
Ready for a one-of-a-kind look at the NFL? On the PFF NFL podcast, Steve Palazzolo and Sam Munson interpret the unique stats of Pro Football Focus to analyze the league, uncover secret superstars, and discuss which teams to watch out for in the next step.
Let's get to Sue Herrera for the latest on the coronavirus. Sue.
Thank you so much, Melissa. Good afternoon, everyone. New York's Governor Andrew Cuomo says his state's economy won't, quote, just bounce back from the pandemic. He is going to Washington, D.C. tomorrow to meet with President Trump and discuss stimulus plans and pandemic response efforts. You can get more on that story at CNBC.com and what he hopes to accomplish during his trip to Washington. Also in New York, that state's first hotspot is starting to reopen. Parts of New Rochelle were placed into a containment zone before the rest of the state went into lockdown. Some construction resumed today, and the retailers are allowed to do curbside pickup. And the Supreme Court has declined to block a judge's ruling that requires the U.S. government to evaluate moving inmates at higher risk of getting COVID-19 out of a federal prison in Ohio. The Justice Department argued it has already implemented plans to protect inmates from the coronavirus. And there are other states that are considering the same thing. You're up to date, Kelly. Send it back to you.
All right, Sue, thanks very much. Still ahead, the path forward for business in the U.S. We'll get a pulse on the economy from a major business leader. Landry's chairman and CEO, Tillman Fertitta, will lay out. There he is. Hi again, Tillman. He'll talk about how he's reopening his casinos and his restaurants around the country, how business is doing, maybe some basketball. Stay tuned.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search Classic Game Replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Buckle up, race fans.
Emotional connection.
With daily insights on the new now, this is Business Interrupted with EY.
Fighting the pandemic on all fronts.
16,000 volunteers are lining up to be infected with COVID-19.
From Washington to Wall Street to your street. Markets in turmoil tonight. Watch and listen live on the CNBC app.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start.
Welcome back to Power Lunch. Stocks near highs of the session. The Dow right now is up by 685 points, a gain of 2.8%. S&P 500 up almost 2% above the 200-day moving average for the first time since early March. And the Nasdaq is up by 87 points. Russell 2000 of note as well, up 3.5% with the reopening trade. Going strong today, Cal.
Yeah, it certainly is. Melissa, thanks. The oil market also closing up for the day. Let's go over to Dominic Chu at the commodity desk. Dom?
All right, the optimism, guys, isn't just in stocks. Those oil prices continue to surge as well. Currently, U.S. benchmark West Texas Intermediate, or WTI, prices are $34.42, 3.5% upside there. World benchmark Brent crude prices, you can see $36.25. 2% gains. Now, for one measure of those WTI prices for futures, today's gains now put prices more than quintupling off where we saw the lows back in April. Today's gains are also being driven in part by more optimism that fuel demand will grow as COVID-19 economic restrictions ease across the world, but also that global oil suppliers are getting rebalanced as large oil-producing countries within oil cartel OPEC and its partner countries like Russia follow through with limiting production. OPEC members, by the way, and their partners are slated to have a a virtual meeting again next month, where some analysts do expect, guys, the cartel to discuss further production cuts for the rest of the year. Melissa, back over to you.
All right, Dom, thank you. The holiday weekend marking a major milestone on the country's path towards reopening. Major businesses opening their doors for the first time in months. Tillman Fertitta owns over 600 restaurants in just about every price point across the country, and some say in many ways his business is a real bellwether for the economy. Currently, he has reopened 270 restaurants and 2 casinos, and this weekend in 2 states he actually says he showed year-over-year growth at his businesses, but this doesn't mean he expects smooth sailing from here. With us now from Houston, Landry's chairman and CEO, Tillman Fertitta. Tillman, it is great to speak with you.
Hey, guys. How are y'all today?
We are great. Let's talk about this past weekend. What did you see on the restaurant side of the business?
Well, I mean, we're still running down, anywhere from 45 to 55% at almost all units. But there's interesting things. You're starting to see different markets where the world has changed a little bit, and all the snowbirds didn't leave Arizona and they didn't leave Florida, and they stayed down there. So they're kind of out of their season now. In those 2 states, but they're staying stronger. All your leisure restaurants where you're on the waterfronts, people did go to the beach this year. I mean, they continued to go. Those were a lot better. But what's killing you is those urban restaurants, with the big restaurants that are just dragging along because there's no business traveler, there's no group business, and there's no convention business.
And it sounds like you're talking about New York City and the New York area, Tillman. And I'm wondering how big of a percentage of your portfolio does New York and the surrounding area make? And what are your expectations here when you do open up? Do you think that things snap back? We saw a sharp V recovery in the stock market. I don't know if people feel that also in their pocketbooks.
Well, I mean, New York, everybody that's big in any business, New York is such a part of their business. Whether you're a financial services company or a retail company or a restaurant company. And I have more full-service restaurants in Manhattan itself than anybody else. And these are huge restaurants that do huge revenue and huge restaurant-level EBITDA. Because New York is New York. And we need to start trying to get it back just a little bit with, of course, strict guidelines, but to get people back to work, and at the same time, the operators. If you don't do something, we are going to cause a commercial real estate bust at some time, because we can't pay rent if we're not doing business.
Are you yourself, Tillman, asking for rent reductions from your landlords? Is that why you believe so firmly that this will be the pain point in the next year, commercial real estate, with the ripple effect on banks?
Definitely. And all leases have some clauses in them that things you never thought would happen, but everybody has to be reasonable with everybody. And I want to be a reasonable tenant, and I expect the landlord to be reasonable with me. But don't expect me to pay you 100% rent when I've been closed by the county, the city, the state, the government, and you, because your mall's not open or your facility's not open, you have no business, your hotel's closed. And I think this is a time that we all have to work together. Everybody needs to be reasonable. And once again, everybody needs to feel some pain.
When you think about cities, Tillman, I wonder if you think about things differently. We've had a number of companies say to their employees, you know what, you can work from home indefinitely. And that would imply that some people actually move out of the cities if this is a trend that lasts. So how do you think about your restaurant empire, the number of restaurants you have concentrated within cities, and the areas you would expand to if this work from home trend actually persists and becomes a new sort of norm?
Well, it's going to hurt all your urban areas, of course. But what's really interesting is in 2008, 2009, 2010 crisis, it was the mortgage crisis in your big downtown units in New York, LA, Houston, Chicago, continued to do pretty darn good. It was the suburban restaurants that were hurting and did poorly because people couldn't even make their mortgages. They were being evicted. Right now, it's just the opposite. Everybody's staying home, and therefore the suburban restaurants are doing much better in this financial crisis than the urban restaurants. So once again, whatever we think is going to happen in this world, it always goes another way.
It's so funny you say that, Tillman. Citron had a big call on buying Restoration Hardware today because they said the de-densification trend makes them a clear winner, and you're kind of talking about the same thing. And by the way, let me just point out, we talked to you last week. We're talking to you on Tuesday today. It's Tillman Tuesdays. We had a thing called Trump Tuesdays here on CNBC way back when, and we know where that. Okay, he's in the White House. I'm just saying. I'm just pointing it out. We appreciate your point of view, is all I'm saying. So, do you think it's going to last, though? I mean, what happens if people are in the suburbs a lot more for the next 5 or 10 years? Maybe especially that corporate customer, than going back into the cities. Wouldn't that be a big problem for you?
It's going to be a huge problem. But once again, everybody's got to adjust. We've got to adjust our menus where they're not as prepped to bring your food costs down. You got to take smaller spaces. And landlords have to realize that as great as the real estate boom has been, that they're not going to be quite as successful either. And that's where, once again, everybody's got to take a little hit. But let me put something in perspective, okay? Same-store sales is everything. And so when you start talking about a retail store or a manufacturing company, restaurants, hotels, when you're down 50%, that's huge. Usually when we report same-store sales on CNBC and somebody's down 5%, that's a problem.
Right, it's a
disaster. Let's just say you're a $5 million business, and all of a sudden you're down $250,000 this year. Well, now you're not getting the leverage of those sales, and that $250,000 is sometimes your most profitable money. So when you start talking about retail, restaurants, hotels, manufacturing down 50%, you're eventually going out of business. It just depends on how much liquidity you have. So we have to fix this, and we have to get people moving around at some point when we know it is safe to get back in all these establishments. Or 21 is not going to be pretty. You can talk about the recovery all you want, but businesses cannot operate at negative 50%.
And you're talking about 2021. You're talking about all of next year, which is, a frustrating prospect for everybody who wants this economy to be able to recover. I want to ask you about the casinos. I want to ask you about basketball as well. Maybe one of the common things, just quickly to stay on this point about the restaurants, is, are we talking plexiglass? Are we talking fewer tables? I literally read an article that was about one different country that was putting in plexiglass in its bars to kind of separate, I guess, the bartenders from the patrons or something. I just can't imagine any of your restaurants having something like that. But what measures could you put in place so that 2021 is better than you're currently fearing?
It's really interesting. I was at the huge Lake Charles Casino, which is a golden nugget right outside of Houston. It's where so many people from Houston go to play because we don't have casino gambling in Texas. And a lot of people were wearing masks, and we were being very careful and making sure, social distancing, 3 people to a table. But people are out, okay? And these statistics are coming now that like 95% of the people that died in Italy, would have died from something else. We're starting to see a lot of that. And so when this data starts coming out and people really realize that if I'm a healthy person, chances are something's not going to happen, it's causing all of us a problem because we're having to enforce the social distancing. The people aren't enforcing the social distancing. But the casinos were busy this weekend. Vegas opens up next week. We opened up in Disney Springs, the huge T-Rex 600-seat restaurant. It operated at 20% of what it normally does. And you talk about these big units, you lose money when you're only operating at 20%.
Yeah, absolutely. No, I can't imagine. Speaking of Disney, just one quick one here on what's going to happen with the basketball season. Is that what we're looking at, kind of finishing out the season in Disney and having are you telling me the players aren't going to interact with one another if everybody's staying at Disney?
If we do Disney, it's really not Disney. It's the Wide World of Sports complex by downtown, and they want to bring all the players there. And I think we're all trying to decide right now the format. And you're seeing all these formats right now of leaks, from sports writers. And this is the way I feel about it. If a player doesn't want to play, they shouldn't have to play. The players vote against us playing, we shouldn't play. And it goes the same for the owners. If the 30 owners decide that they don't want to play, we shouldn't play. But there seems to be a lot of positive momentum right now. And I think we really have our act together when it's going to come to how we're going to contain and test, and it's going to be extremely safe for the players and all the personnel that travels with the team. But there won't be any fans there. I can promise you that. It doesn't look like.
Yeah.
Getting back to Landry's, Tillman, because we're running out of time at this point. There are a lot of smaller restaurant chains that don't have the access to capital that you have, that may really be facing some tough times. Are you going to be opportunistic in this downturn in terms of continuing your expansion? I mean, you've been expanding pretty briskly over the past few years.
Well, we'll come out of this one way or not, I believe. And you know, I go back to 2000 and what I picked up coming out of the 2000 crisis in 99 with Rainforest and Bubba Gump and Saltgrass. And in 2008, I came out with Martins, McCormick and Schmick and others. And even at the start of this kind of wave, because it had started to slow down a little bit, I've, you know, picked up Del Frisco's and a few others. And yeah, it's going to be a great opportunity for the people that want to grow. And that's what happens after any financial crisis, because this is no longer the pandemic. That's one side over here, but we're in a financial crisis. And anytime there's a financial crisis, there's a lot of opportunity. And hopefully I'll be one of the ones that's able to help other people and keep their companies going and be able to provide jobs and not shut restaurants down, because it takes somebody stronger to come in to help do this.
Tillman, always great speaking with you. We look forward to our next chat. Tillman Fertitta.
Thank you.
Tillman Tuesdays, just saying. Melissa, thanks. A big rally on Wall Street right now. Stocks are getting back to levels we haven't seen since early March. The S&P is over its 200-day moving average for the first time since then. Today, it's hopes for a vaccine that are helping the markets get a lift. The cruise line stocks all up more than 10%, about 15% in Royal Caribbean's case. Casino is also moving higher on the day on those hopes, like Tillman mentioned, of Las Vegas reopening next week. We'll have some of the other big movers coming up on Power Lunch.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search Classic Game Replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn. Are you ready for the realest firsthand take of what's happening in the NBA? On their podcast, All the Smoke, former NBA players Matt Barnes and Steven Jackson bring their fiery intensity to the mic, dishing on the latest news and drama from on and off the court without boundaries.
Half man, half amazing.
Welcome back. Dow's up 650 points. It's time for today's Power Movers. We start with a couple of stay-at-home stocks. Williams-Sonoma rising on an upgrade from Telsey Advisory. To outperform, they doubled the price target to 80 from 40, saying Americans are willing to spend more money on their homes right now. WSM just under $70 a share. If you're going to be stuck at home, you might as well have comfortable footwear. Crocs saw a 14% jump in sales in March. The only one of 30 footwear brands to see an increase, according to the Wall Street Journal. I just bought my son a pair, and I love them. He can go through the hose, and they get wet, and it's fine. Anyway, Crocs up 9%. And another sign of the strength of today's rally is that the gold stocks, Melissa, are tumbling anywhere from 4 to about 6%. Yep.
Well, stocks at the highs of the session. Casino stocks joining in on the rally as more get ready to reopen across the country. Let's get to Contessa Brewer for the latest. Contessa.
Yeah, look at MGM right now, up 11%. It's got one of the strongest presences on the Strip. It's already laid out which casinos will reopen, and Nevada's governor has cleared the way for that to happen June 4th. As long as the Nevada Gaming Control Board clears the way. They're in a meeting right now. It's going on 3 hours, laying out what the science is behind prevention. How do you diagnose people who might be symptomatic? How do you enforce the rules that are going to be in place throughout the industry? A big deal for Nevada. It is the worst in the nation in terms of the unemployment rate. And as you can see right now, there's a lot of hopes being pinned on these casinos reopening. Not just there, but MGM just opened yesterday in Mississippi as well and had a great turnout. I'm hearing from Caesars that they are pleasantly surprised and seeing in some places even year-on-year growth for visitation and for the amount of money spent. Look at Wynn is up almost 9%. Las Vegas Sands up 6% as well. We'll stay on top of it. Melissa?
Right. Contessa, thank you. Contessa Brewer. Coming up, how restaurants and their drive-thrus are eating the lunch of the third-party delivery companies. Power Lunch always delivers. Stay with us.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio.
Statement necklace? Or let your neck make the statement.
Gold Bond Neck and Chest firms and repairs depleted skin. And new Neck and Chest Age Defense with SPF helps protect from visible signs of premature aging. Gold Bond, Ultimate Lotion, Ultimate Skin.
This earnings season, we've seen a host of major retailers report fantastic e-commerce numbers. Target, Walmart, Home Depot, Lowe's. But even after all of that, Amazon's still the king of e-commerce. Watch or listen live on the CNBC app.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn. The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, I mean, let's just start with the headline, which is I did test positive for COVID-19.
You might think food delivery services would be booming during this pandemic, but those companies are facing competition from the restaurants themselves. Kate Rogers joins us now with more. Kate.
Hi, Melissa. Well, that's right. You'd think everybody would be ordering from restaurants delivered to their home during the pandemic, but that doesn't seem to quite be the case. New data from AlixPartners shows that while consumers have ordered delivery and takeout during the pandemic, drive-through was actually the preferred method for takeout, followed by traditional takeout and then curbside pickup. Third-party providers actually ranked last and were even less favorable among older consumers. The good news is that analysts at Morningstar and BTIG say that in-store transactions, along with carryout and curbside pickup, are the more profitable options, with delivery being more costly for both consumers and restaurants, with a middleman involved here. Carryout is big business, and it'll likely continue to be. It's why restaurants like Chipotle have installed in-store pickup shelves and Chipotle lanes for to-go orders. Domino's also has carryout kiosks. CEO Rich Allison says that will be an important part of the profit equation going forward. These names have outperformed in this space as they have many different ways to cater to consumers in this new normal. But delivery, of course, is also important for new customer acquisitions and growing business. That's why you're seeing basically every major restaurant player in QSR and fast food teaming up with delivery companies, of course, with the exception of Domino's, which does not work with third-party aggregators. Guys, back over to you.
I guess, Kate, it does seem less germy because you remove sort of a middleman touching your order, right? If you're going through a drive-through, you're just going yourself. But I would imagine this really only works in the suburbs as opposed to the more urban areas where Grubhub would be more predominant.
Yeah, that's certainly true. But I mean, we're even hearing from restaurants and names like Starbucks saying that they're going to speed up some of the different store formats that they were planning to roll out in the next few years over the next year. Things like to-go, drive-throughs in areas where it's possible to cater to consumers in the new normal. So I think this is something that more and more brands are going to be thinking about and potentially changing and adapting their plans, as this whole thing evolves.
All right, Kate, thank you. Kate Rogers.
Let's take a look at the markets today. Some key milestones. The Dow above 25,000 for the first time since March 10th. The S&P above 3,000 for the first time since March 5th. And the NASDAQ is just 4% from its all-time high. We'll have much more on this rally coming up.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
The kitchen, the basement, wherever your office is, the global credit market is open. And Open Trading will help you save transaction costs. Stay safe, stay home, stay in the market. Market access.
I lost my job. My wife was furloughed.
I had to lay off 3,000 employees today.
I have to homeschool 3 kids while working full-time.
My HR department is flooded with requests for mental health resources.
We're all affected by this crisis, but we're resilient. Sherman's working with CEOs, policymakers, HR professionals, and workers across the globe to navigate these times. I'm John A.C. Taylor Jr., President and CEO of Sherman. Together, we will create what the new future of work looks like.
Yes, the first word to any adventure. But when allergies and congestion strike, take Allegra D, a non-drowsy antihistamine plus a powerful decongestant. So you can always say yes to putting your true colors on display. Say yes to Allegra D.
I was born in 1937. It was a very struggling period of time, up and down, depression to exuberance. And you could name many, many cycles like that over the years. My generation, having come through so many wars and so many things, persistence. It's the heartbeat of this country. Stick with it.
Welcome back. It's a strong day for investors. The Dow, S&P, and NASDAQ are all returning to all kinds of key levels. There's the Dow up 649 points right now, about 2.5% gain. The NASDAQ is the laggard, interestingly, but it's only 4% off its all-time highs. Do stocks have the strength to keep this momentum going? Let's bring in Todd Gordon, who is Managing Director of Ascent Wealth Partners and a CNBC contributor. Todd, talk a little bit more about that. So I've seen a few people say if the S&P goes above 3,000, all the technicians are going to say they got to rethink their playbooks and maybe look at this being a stronger rebound than we would have thought a few weeks back.
I don't necessarily agree with that, Kelly. I mean, I think the NASDAQ just within 100 points in the NDX of all-time highs, I think that's significant. But specifically, the gory details of the S&P, but I think the level is closer to 3,100 in terms of a retracement level that I know you're aware of. So for me, that's the all clear sign. But for me, I hate to say it, but I did believe that the big sell-off that we saw in March may have been the retest that everybody was already looking for. If you just kind of take a look at the last three significant corrections from the 09 lows, they were unbelievably separated by about 15 months between the two. So we saw it in 2010, 11, 15, and 16, and here we go again. So I put this out on Twitter saying maybe this was the retest, and people got quite a rise out of that. So I was bullish, and I continue to remain bullish.
So in other words, you like a retest of the lows because it suggests that, okay, we kind of cleared that hurdle, or no? Explain that a little bit more. And also, I'm curious if you can address within the market what's going on with the stay-at-home trade. I mean, when you look at those stocks, does it say to you, hey, be careful here because there's rotation underway, or hey, yeah, these are going to be your new winners?
Yeah, great point. So to be clear, that first December 2018-19, that first drop, I think that was test one, and then the March drop that we just saw was the retest, in fact. So I know I'm of the camp. I believe we continue higher. I believe we move to new highs in the S&P. It's completely amazing considering the poor economic data that we have. So today specifically, we're seeing the NASDAQ and the stay-at-home trade and like beyond. All those names take a little bit of a breather as that NASDAQ is consolidating below the low, and we're seeing a move up in a lot of different sectors that were very beaten down, like industrials, and we're seeing in consumer discretionary, specifically the carnival, or the cruises, I should say, were up quite a bit within the transports, airlines, and we're even some casinos and apparels and some of the hotel names. So we're seeing a nice rotation. Specifically, Kelly, if you want to go here, I'm focusing on sort of this move into people spending money, not the stay-at-home economy, but people spending money at their houses. I think millennials, I think older Gen Xers are starting to spend money, and there's a few names that we're watching there. So we continue to remain bullish.
In terms of this market going higher, though, Todd, we would need to see the financials and industrials. I mean, more broadly than saying the reopening trade or the stay-at-home stocks. I mean, financials and industrials would have to continue leading the way. Now, either that, or are we still going to be leaning on the narrow leadership of the five biggest companies in the S&P 500?
I think we've seen an impressive move back, Melissa, in technology. So do we have to see the industrials, everybody in the factories? Do we have to see the financials firing? No, because they've been lagging, I think, for a long period of time. Same could be said with energy. Why don't we take, again, like one name that we like specifically, Home Depot. They've done a really good job adapting to a new normal. I personally, I haven't spent as much time in Home Depot working on home projects when I'm not working. My wife's very happy about it. So, I mean, they had a tough quarter, but I think the stock is acting extremely well. New home sales, they just came out, massive number, 623,000, like expectations of 492. So really big beat there, low interest rate environment. We own Home Depot in our portfolio. They're increasing their dividend. And I think, Melissa, it's kind of an Amazon-proof sort of stock, right? Because you're not going to go and buy these big ticket, heavy, bulky items and get them shipped to your house. You got to go there.
Sure.
The pickup experience has been pretty good. And then, one more name, if I could throw it out there, that we like is Masco. This is a home improvement buildings products. We hold in our portfolio as well. Wells Fargo just upped the target $3 to 50. The chart looks good, trying to get through 50, which is the level they just upgraded. And they're the maker of Behr paint, which is carried by Home Depot. So, before we get the all clear, I think there's new sectors, new specific segments within this industry coming online that need to be up and firing. And then we can reopen for business.
If that's the case, and we're running out of time, Todd, but if that is the case, if you're a holder of Qs, triple Qs right now, which I am sure many people at home are, what would you do? What would you do here? I mean, if you think that they won't necessarily be the leadership anymore.
Well, it's not necessarily what I'm saying. I'm saying it's time for other people in the sun. It's time for other sectors and other names within the sun to have their time, so to speak. So technology, as you know, it was leading on the whole way up here. It was leading pre-COVID. So now we're seeing a little bit of a breather in tech as we are just below those NDX highs, which is not surprising. And it'd be great to see some other sectors come back on, which is which is similar to how this economy is coming back online. And so, again, we don't need to see financials and energy and the big industrials that have come under a lot of pressure. We can take it one step at a time. This is going to be a long process, but I still think the trend is strong. We continue to remain bullish on the economy.
Todd, great to see you. Thank you. Todd Gordon.
You too, Melissa.
I'm doing that Home Depot, I'm their business. I got the raised garden beds are going in today.
I wanted to regrout my shower for the longest time. I still haven't gotten around to it, but, if the pandemic goes a little longer, maybe that will be
Do you know how to
list.
grout?
Oh, absolutely. I've grouted before.
Of course. Oh, absolutely. I know how to grout. Let me just point out, United Airlines, second best stock in the S&P 500 now. Right now, it's up 16%.
Yeah, that reopening trade going strong today, Kelly. That's for sure.
Yeah, well, we're still working on our homes.
Thank you for watching Power Lunch. Good to see you all. Closing bell picks up right now.
Melissa and Kelly, thank you, and welcome to Closing Bell. That right there was our new animation. I'm Sarah Eisen here with Wilfred Frost. Just a sneak peek there for you of our new graphics look here on Closing Bell. A lot of people, Wilfred, put in a lot of work, from the graphics artists to the producers to the technical team, on making this work. We're excited. Let's look at what's driving the action right now in stocks as we see a big rally on this Tuesday. S&P 500 back above 3,000. The Dow surges above 25,000. Big rally to start the week. Continued reopenings and signs of economic recovery across the country, with Apple just saying it will reopen 100 more stores in the U.S. this week, and progress on the vaccine front as well, with heavy hitters stepping in, which Wilfred will have much more on later in the show.
We certainly will, and not just are we excited about the new package there, Sarah. The music is exciting. I'd seen the graphic, but I had not heard this music. They should just play it for the whole hour. Keep people on their toes. Very dynamic, and as you said, thanks to all the team for making it work. We have got 59 minutes left of the show and some big guests to come. A huge exclusive with the CEO of Merck, Ken Frazier. He'll join us as the pharmaceutical giant lays out its long-awaited strategy to battle the coronavirus. Plus, Mount Sinai teaming up with a slew of big-name companies on a new initiative to support frontline workers. We'll speak with the co-chair of Mount Sinai and the CEO of Pinterest, which is joining the effort. Don't want to miss either of those.
59 minutes left of trade. We've got full team coverage of today's market rally. Mike Santoli drilling down on the action. Meg Terrell is tracking progress on the vaccine front. And Wilfred's got new comments from JP Morgan CEO Jamie Dimon. But Mike, first to you on this broader market, and take us inside. What are you seeing?
Yeah, so we obviously have broken above these levels everybody was fixated on last week. Obviously, the slowing down of the rally was just a stutter step and not a stumble. It seems really all the market needed was for a long weekend to pass without anything interrupting the idea that we have momentum toward a reopening of the economy, and there's really nothing to kind of get in the way of the idea that that's going to cause incremental business activity. For now, investors feel underexposed to that theme. That's why you're seeing what's happening under the hood. The S&P 500 above 3,000. We got above these levels at first last October. So that's the realm that we're now playing in. I will say a very gentle range during the day. It's been just all about the opening pop, and then we've just sat there, at least at the index level. Did want to point out the kind of interplay of momentum stocks against deep value stocks. And obviously, it's been mostly about momentum, the winners continuing to win for much of this year. If you look right now, since the low, March 23rd, value has now, it's kind of nosed ahead of momentum right now. Clearly a more cyclical bent to this current phase of the rally. That's a positive. It's sort of affirming the idea that there's some better times for beaten down areas. But look at a longer term, 1 year look at this relationship, and you'll see just how vast the gap is that deep value stocks measured by this RPV ETF would have to kind of close if they're going to continue to tell that message that the economy is going to accelerate from here, or at least be better than feared about 10 weeks ago, guys.
Is that the message from the market? Can you really infer anything as far as what the economic prognosis is from the market, with people saying that, everything's being distorted by the Federal Reserve and pumping in so much liquidity that the market and the economy are just going to go in different directions?
You can infer what the market is saying now versus what it was saying a couple of months ago, or at least right after the Fed came in, because we've had two different markets in the span of this period when the economy was shut off and the Fed was coming in and becoming very active. So it's not just been one mode since all that began. And I also think we have to keep in mind, we're grading on a curve here because those beaten down value cyclical areas like the travel stocks, the financials, they're so below where they were just a few months ago that we're just kind of making up a little bit of the lost ground that has built up. So it's not as if the market is saying the economy is going to be great, we're back to normal, by the end of the summer. It's saying it's moving in that direction a little more quickly than we had anticipated just several weeks ago.
All right, well, Mike, certainly helping out. We'll see in just a bit. Thank you. Progress on the vaccine front, injecting a dose of optimism into this market today. Meg Terrell joins us with the latest developments. Meg.
Hi, Sarah. Well, some big news from Merck today, essentially laying out 3 different moves, solidifying its strategy in COVID-19. One was to in-license an antiviral drug from Ridgeback Bio. And then the other 2 were 2 different deals on vaccines. One, a partnership with a nonprofit to develop a vaccine based on the same technology used for their Ebola vaccine. And the other, acquiring a company called Themis. Now, here's where Merck lines up in terms of the timeline for getting into human trials. You can see they're around the June-July timeframe. They say with that second vaccine that I just mentioned, they'll be in human trials within a few weeks. There are already, of course, several companies that have already started trials, and most recently, just today, Novavax announced it was starting phase 1 trials in Australia. And there's a different collection of companies here, some with proven vaccine experience like Merck, like Johnson & Johnson, which is getting in September, and others which are newer companies like Novavax. Now, Merck points out that over the last 25 years, there have only been 7 vaccines approved for new disease-causing pathogens, and 4 of them came from Merck. So they argue they have both the track record in vaccine development and technologies that have been proven to work before to put together a sort of winning combination to getting a COVID-19 vaccine, guys.
All right, Meg, one quick question. Another reason that the market is rallying and what some people are talking about and pointing to is this idea that among the states that have reopened, broadly speaking, there hasn't been any major surge in the key metrics, the positivity rates as testing has gone up, the hospitalizations. I mean, there are hot spots, but can you tell us what the data actually show on that and how optimistic we should be about this reopening from a health perspective?
I think from the experts that I've been following on this, they're very cautious watching those metrics, and they're worried that there might be some upticks in certain spots, and they're watching those very closely. So we have to hope that we won't see a lot of new hotspots as the country opens up, but most of the people I'm talking with do expect some kind of resurgence at some point, whether it's now or whether it's in the fall. And so it sounds like a long haul, kind of no matter what. However, we have to hope for progress on all of these different fronts.
Meg Terrell, thank you. And we look forward to an interview, an exclusive with Merck CEO Ken Frazier on this show in the next hour on the big coronavirus developments from that company. 2 announcements on vaccines and 1 on a potential treatment that's coming up 4 p.m. hour. Wilfred.
Yeah, just want to switch focus to talk about the banks. And earlier today at the Deutsche Bank 10th Annual Financial Services Conference in New York, JP Morgan Chairman and CEO Jamie Dimon addressed a number of factors. And of course, the bank's performing very well today. He also spoke specifically about dividends and buybacks.
So I think it's important that a company try to sustain its dividend. So the better course of action was to wait, and to see. And if the recovery starts, and like I said, I think we'll have a pretty good idea when we report earnings, then you will never need to cut your dividend. If by any chance that it's pretty clear that this is going to get worse dramatically, then of course the board will take up the issue and say, what should we do? When should we do it? How should we do it? If a board is mature, they'll consider that. But you have to have a pretty bad economic environment, I think, for banks to justify to their boards to show that we should cut it now. I think you got to, see the white of the eyes of the recovery before you start some like buybacks. But I think that companies and it'll be more opportunistic if companies all of a sudden are retaining a lot of capital, they're earning money, reserves are coming down, et cetera. Yeah, I think you may see people start them, but they probably won't be the size that you saw before.
He also struck a relatively constructive tone that provisions for things like bad loans, I don't know if we can roll along with that, but things like provisions for bad loans would not need to continue to rise in the second half of the year.
We would have substantial increase in credit reserves in the second quarter, but But if the base case happens, you may not need any more credit reserves in the third and fourth quarter or going forward. Again, because CECL upfronted a lot more than it did before. My hope would be is that when you start to see the first people come off of forbearance, that the people who start repaying is higher than people think, not lower. Which, by the way, also gives them an increased chance to do refi, which can be very smart for them in certain cases. In the old days, there was always a danger that when you stopped paying that mortgage, you would never start again. But remember, last time around, with the thing we're looking at, home prices are down 40%.
Finally, he suggested that trading revenues in the second quarter will be just as strong as they were in Q1, which was very strong, of course. All of this pushed JP Morgan stock to a session high, pretty much where it remains, up about 8% today. Banks in general benefiting from reopening optimism, rising yields in the bond market, and that market rotation that has been the result of those factors. KBW Banks Index about 9% today, but still down 34% year to date. And Sarah, that's where I'd say the tone of Jamie Dimon's presentation today was relatively constructive, relative to bank share prices being down about 40% year to date, as opposed to being bullish outright. And I will just mention that tomorrow, exclusively on Closing Bell, we will be able to speak to John Waldron, President and COO at Goldman Sachs, for a further perspective. Their stock, by the way, only down about 15% year to date now with the bounce today.
I was going to ask you about the tone, because Jamie Dimon always sort of sets the tone, not just for the banking industry, but very much for corporate America often. And I couldn't really tell there how he was feeling. It's constructive is the word you used, but I couldn't tell how optimistic. Often we look to him, for instance, the Diamond Bottom, when he was buying shares, as sort of a sentiment indicator almost of corporate America.
Well, and he was asked about that, but he wasn't drawn to it. And I guess if he really felt as strongly as he did about it in 2016, he would have bought stock perhaps, albeit he has plenty already, more so today than he did then. But he wouldn't be drawn on calling a bottom per se. But as I said, he was constructive relative to the image you may have had for a share price that was down sort of 40% or so coming into that. I would say this as well, Sarah. He said even in a bear case scenario from here, if you had a bull, a base, and a bear case scenario, the bank will still make money this year. He said only if you had a repeat of a Great Depression, i.e. a super bear case scenario, would that not be the case. And he suggested the same would apply to most of the banks and that they were all very well capitalized. I guess you could sum it up one other way, which is to say there will be more provisions for bad loans this quarter. So it's not like this quarter is already perfect. Right. He just said in the second half of the year, after another quarter of more provisions for bad loans, then you probably wouldn't have to see that again. And again, share prices, having been down sharply coming into today, are able to rally given that bit of news today. Citigroup's up the most today, 10.6%. After the break, would you feel safe going back to the shopping mall? It's a key question for retailers and operators alike. We'll speak with the CEO of a company that runs more than 80 shopping centers in California, Colorado, and Illinois, and we'll ask whether customers are coming back. Stay with us. Closing Bell. Back after this short break.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back at the wall. It's gone!
Search classic game replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson. Up with it over to Reese for one. Back to Hodges. It gets away from him. Barrows for the second. Hodges.
It's on demand, it's free, and it's only on TuneIn.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Are you ready for the realest first-hand take of what's happening in the NBA? On their podcast, All the Smoke, former NBA players Matt Barnes and Steven Jackson bring their fiery intensity to the mic, dishing on the latest news and drama from on and off the court without boundaries.
Half man, half amazing. My friend, our brother, Vince Carter, man, welcome to the show.
Yo, what's up, man?
What's up, my brother?
Fellas? Man, I'm good.
Search All the Smoke on TuneIn to listen.
Wanna bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
Mr. Darren Waller, good to have you. Yes, sir, it's good to...
Welcome back. As states begin to ease lockdown rules, Americans are slowly emerging from their homes. We found some interesting data points that are showing that things are changing. Data from Apple Maps, for instance, saw an increase in requests for directions, particularly with driving and walking. And public transport also seeing an uptick as some start to consider buses and subways. How about hotel demand? Also growing slightly as weekly hotel occupancy rates show some signs of life in May, according to data from STR. And restaurants have been one of the hardest hit, we know, areas of the pandemic. But OpenTable seeing a slight uptick in reservations year over year. Slight, Wilfred, but we will take it, moving in the right direction.
Absolutely. Small steps, but as you say, in the right direction. Now, another area we've been watching closely in that regard is shopping malls. Even as businesses start to reopen, some major retailers are struggling to pay rent and asking to renegotiate on their leases or even requesting to defer payments altogether. Joining us now, Sandy Segal, CEO of Newmark Merrill, which owns and manages 85 different shopping centers in California, Colorado, and Illinois. Very good afternoon to you. Thanks for joining us.
Thanks for having us.
So how tough has it been? And maybe we can get to some of the green shoots, but how tough has it been over the last couple of months?
Well, I mean, it's been what you'd expect from a pandemic. It went from 0 to 60 in no time, and over 50% of our retailers had to close. Obviously, you don't want to be in a business where your customers aren't allowed out of their houses. So it's been a tough go, but we've been working hard to communicate and get ready to reopen.
So what is open right now, and what is it looking like?
Yeah, so our process was this: the essential services which for us included grocery stores, dollar stores, pharmacies, all those Targets and Walmarts. They've been open all along. So, we had to take care of those customers who came and visited there. And most of those retailers actually had an upsurge in sales. And then our smaller retailers, take our restaurants and our smaller retailers, had had to go and delivery services. And they really had to ramp up to make that possible. What's been happening is, and we're in 3 states, we're in Colorado, Illinois, and California, is county by county we've started to reopen. So this last weekend, we got a number of our restaurants open for sit-in dining, which has been great, and a number of retailers where you could go not just for curbside, but into the store. So today we're about 70% reopened.
And have you seen footfall come back strongly or not?
Yeah, here's what's interesting, and I think this goes to the strength of the retail environment. Even with the same tenants being open, just the essential service tenants being open, we were having double-digit traffic increases to our centers, going to the exact same tenants week over week since about late April, okay? Since last week, our average traffic has been up about 25%. So we are seeing more customers starting to come back. Now, the length of stay is a little bit shorter, but I think the signs are pretty positive. I think people are starting to dip their toe in the water.
Are all of your stores in the different shopping centers and malls open, and are they paying rent?
Well, two different questions there. So first of all, not all of our stores. So for us, we have movie theaters, we have gyms, we have a lot of places where, 3 months ago we would have been thrilled to have close personal interaction. Those are all still closed. In LA County, we still have restrictions on people going inside stores and shopping. That is still curbside. So that is a phenomenon. Hopefully this week, LA County is going to open up a little bit. And even when they open, they all have occupancy restrictions. So it's still a restricted kind of opening. On the rent side of the equation, rent has really been sort of a bifurcated kind of thing. For us, our biggest focus is making sure our small business people survive. The heart of our communities, the heart of our shopping centers are our small business people. There were a number of them that were completely shut down. So we've worked very closely with them to help them at least defer at least some rent. But more importantly, work with the federal government for SBA and PPP loans. So we've done a lot as far as helping them identify resources. So I would say our rent collection has been probably somewhere between the 60 to 70% range, with a lot of that orientated towards the tenants that either never closed because they were essential services or those that were partially open.
What about the bigger tenants? Are they receiving any deals from you on rent? Should they be receiving? There are questions about companies like Starbucks or Chipotle, which are doing relatively well compared to the smaller guy asking for rent concessions.
Yeah, I think that's a great question. I think the way I approached this from the very beginning was we understand this pandemic's affecting everybody, but some tenants have different accessibility to the capital markets than our small tenants. So we said all of our big tenants, listen, we understand that you're going through a lot of liquidity and this is a very scary situation, but you can access equity markets, you can access public debt markets. We need you to pay rent so that we have the resources to help our smaller tenants. So with very limited exceptions, we have made a very small amount of deals. Now, that being said, often if we do make a deal, those deals are short-term deferrals with a fairly accelerated payback. So we do have the resources. We want to be we don't want to be tone deaf to the needs of all of our tenants, but we also want to recognize that these big tenants have different resources than our small tenants.
What about going up the food chain, Sandy? Have you then asked for some kind of deferrals with the banks for interest payments you have due?
We've had to. So again, a big part of this, and we jumped on this very early in the cycle as soon as we realized what this was becoming. We went to our tenants, our lenders, and we were very clear with them. We said to them, here's what the stress in the system looks like to us. This is what this could look like. And at this kind of stress level, we can't pay you, and we don't want to go into default. So how can we work best with you? And so what ended up happening was most of our lenders were fantastic. Thankfully, we've had long relationship with a lot of our lenders. Our majority lenders are insurance companies, and they were incredible. One insurance company in particular. And we worked with them, and we were able to defer our payments, so that gave us some flexibility to defer payments for some of our smaller tenants. So that's generally been a very good experience.
Sandy, thanks for joining us.
Thank you, and thanks for all you did.
37 minutes left of trading. Check out the major averages. They're all going strong. The S&P is over 3,000. The Dow's over 25,000. Every sector in the market is higher. Financials, though, really leading the charge, zooming higher compared to the other sectors right now, as Wilfred mentioned. The tech-heavy NASDAQ is lagging, only up about 0.7%. Coming up, we're going to talk to the CEO of Merck, first company to receive FDA approval for an Ebola vaccine, about its attempts now to tackle the coronavirus via vaccines and treatments. And as we head to break, a quick check on bonds. Yields are making a move higher today. The 10-year yielding around 0.7%, just below that. But they're selling bonds going into stocks, and that's pushing yields up. Closing bell, we'll be right back.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Wanna bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
Mr. Darren Waller, good to have you. Yes, sir, it's good to be here. Dana White, welcome to the Alumni Lounge. Thanks for having me, brother. Big member of our NFL alumni family, and CEO of the XFL, Mr. Oliver Luck. Charlie, good to see you. Thanks for having me. We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen. With the NHL season temporarily on ice, now is a good time to catch up on past games.
Get yours.
Welcome back. We've got 35 minutes left of the session. Here's a check-in on the markets. As you can see, healthy rebound today. The Dow leads the charge up about 3%, just shy of that, 677 points, which is pretty much near the session highs, which was 704. S&P 500, as you can see, up 1.8%. NASDAQ still the outperformer comfortably year to date, but only up 0.7% today. Let's check on some individual market movers. Crocs getting a pop today on the back of a 14% sales jump for the month of March as compared to the same time last year. New data also showing that Crocs was one of the top 30 footwear brands to show a sales increase during the month of March, up 9.5% today. Meantime, shares of Spotify falling. This on a report saying Amazon may invest in localized podcasts, adding that sports content is top of mind for Amazon as it plans to buy up more TV rights and have additional audio content for users. Spotify was lower, but ending the day positive, up about 0.4%.
Still scratching my head over Crocs. Time now for a coronavirus update with Sue Herrera. Hi, Sue.
I'm doing the same thing, Sarah. Thank you so much. Good afternoon, everyone. We have some new numbers for you. The U.S. death toll now approaching 100,000. That's according to data from Johns Hopkins. Vice President Mike Pence's press secretary, Katie Miller, has returned to work after testing positive for the coronavirus nearly 3 weeks ago. In a tweet, Miller said she has since tested negative 3 times. New York federal prosecutors have charged 2 men in separate schemes to inflate personal protective equipment prices. The first, a pharmacist who called himself the Masked Man and is being accused of selling $200,000 worth of N95 masks at a 50% markup. The other, a used car salesman who allegedly purchased large quantities of critical equipment in February with the intent to resell it at a higher markup, as high as 500%, to the city of New York. And Brazil now has the highest COVID-19 death rate in the entire world. And a new study by the University of Washington is warning the death toll there could spike 5-fold to 125,000 by early August. That nation's president has resisted calls for a lockdown, as many fear it has become the newest hotspot. For more on that story, you can head to CNBC.com. Wilf, I'll send it back to you.
Sue, thanks so much for that. After the break, we'll speak with the co-chair of Mount Sinai and the CEO of Pinterest about a new effort to help frontline workers and how businesses at both organizations have altered during the pandemic.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a...
I was born in 1937. It was a very struggling period of time, up and down, depression to exuberance. And you could name many, many cycles like that over the years. My generation, having come through so many wars and so many things, persistence. It's the heartbeat of this country. Stick with it.
The kitchen, the basement. Wherever your office is, the global credit market is open. And open trading will help you save transaction costs. Stay safe, stay home, stay in the market. Market access.
Reopening the country and operating through the crisis. Redefining the way we work. Stimulus for the economy and the unemployed. Breakthroughs toward a vaccine. Stay connected, stay informed. Watch and listen live on the CNBC app.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening. While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic Game Replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Car insurance. Welcome back. Just under 30 minutes left to trade. There's a sector heat map, green across the screen, as you can see. All 11 sectors higher. Technology and healthcare, recent outperformance, of course, at the bottom of the pile, but still higher by about 1/3% each. Financials very much at the top, up 6%. Banks themselves up 9% or so for the KBW Banks Index. Industrials and energy also gaining strongly today. We've got, 29 minutes left. Here are the key things that are driving that action you just witnessed. Equities crossing some key thresholds. S&P back above 3,000. The Dow above 25,000 on a big rally today to start the week, as we just showed you. Continued reopenings and signs of economic recovery across the country, with Apple saying it will reopen 100 more stores in the U.S. this week. And progress on the vaccine front, with Merck announcing a number of treatment efforts. We'll speak with the CEO just after the close today. Ken Frazier, big one to come. You don't want to miss that.
We've got some breaking news now on the Senate insider trading investigation. Kayla Tausche with the details. Kayla.
Sarah, the Wall Street Journal is reporting, according to its sources, that the Department of Justice is going to be closing the investigations of trading in the portfolios of Senators Inhofe, Feinstein, and Loeffler. All of those lawmakers had access to information about the coronavirus as that concern was ramping up and just before the market sell-off. Notably, the department is not expected to close the investigation into trading by Senator Richard Burr, who had more direct involvement in a near liquidation of his portfolio. Senator Burr has said that he was relying on public information reported by CNBC Asia. But according to the Wall Street Journal, the investigation into Burr's trading activity will continue, while the investigations into trading on behalf of those other lawmakers, either by their spouses or their investment advisors, is going to be closed. When we get more information, we'll bring it to you. But that is the latest. Back to you.
Kayla, thank you. Drop and give me 10. That's what Mount Sinai is hoping some Americans will do as part of its new Fit for the Frontline Challenge, which kicks off today. The goal is to raise funds for frontline health workers, and it's drawing some major corporate partners. Joining us now to discuss, Rich Friedman is the co-chairman of Mount Sinai Health System and chairman of Goldman Sachs Merchant Banking Division, along with Pinterest CEO Ben Silverman. Thank you both for joining us. So, Rich, what exactly is this challenge? How does it work?
So this is a challenge that came to me about 3 weeks ago. And the idea here is to give a global and well-deserved tribute to the frontline workers who've carried us through, this pandemic. So, interestingly, it came to me as I was literally working out in the morning. And I came up with the idea that we could do this kind of a fundraise, sort of like a variant of the Ice Bucket Challenge from years ago. And I first talked to Mount Sinai about just doing it for Mount Sinai. And as we talked about it further, we said, this will be more interesting if we could be national. And then I scared the people at Mount Sinai because they said, how could we possibly do this? And then we came up with the path. So it's been a while to put this together. But what we have 26 academic medical centers in the United States, among the leading in the world. And these are a treasure to the United States to have these academic medical centers. And their employees of the hospitals have really been treasures to us to take care of us during this period. So the idea is for someone to be able to sort of pick an activity, run 5 miles, bike 25 miles. I'm going to shoot baskets, and then get people to sponsor you. And the proceeds of which go to the hospital of your choice. So we have 26 that are in, but this is an invite to any hospital system, any academic medical center that's out there to join this challenge and raise money truly in honor of the front line. And I have a personal reason for it because my son is a frontline worker, and he was there in the middle of the surge. And he's now back. He finished his 4th-year residency. But this has been a passion for me to take care of our front lines from the beginning of the pandemic.
Oh, and it's a great idea, Rich. And Ben, you guys at Pinterest are corporate sort of partners, I guess, for this and supporting the push. And you also yourself have developed an app that's here to help us through this crisis. Is that right?
Yeah, when Rich shared the idea, I was really excited about a chance to say thanks and also raise money for the folks that have been working so hard to keep us all safe. Both of my sisters, both my parents are doctors, so I definitely, like Rich, feel personally connected to it. And then Pinterest, the platform, is all about inspiration. And we have a lot of creative folks on Pinterest that would love a way to contribute in some small way. So we were excited to jump on board. As you mentioned, separate from Pinterest, we've also been building an app to help fight with the epidemic. It's called How We Feel. And it's an app that lets people share their symptoms as well as their emotional well-being. And we provide that data to researchers to help them better understand the spread of the virus and how we can best support those in need.
Rich, wanted to ask you about the Mount Sinai Health System and how the hospital is doing now that the case numbers and hospitalizations have gone down in New York, but it's still very much a hot spot. Just give us an update on what the hospital looks like, how much normal activity has resumed, and how much is still dedicated to COVID-19.
Well, Sarah, that's a good question. The way I look at it is there are 3 phases to what's gone on. The first phase was the surge. And I'm happy to report that the surge is really over, that no more than 20% of our hospitals basically have COVID patients, and the other 80% has been cleaned and sanitized and is essentially reopened for mandatory or required kind of surgeries. We're still waiting for the governor to allow elective surgeries, but that's what comes next is for people to resume their normal health care, which is critical because if people basically stop and don't go in for their procedures that they need to, that's going to create a bigger issue. And to me, phase 3 is what comes next. And we don't know what comes next. So I think the good news is we're down to less than 20% of what we had at our peak. The hospitals are basically pretty quiet. There's really very few people in the emergency rooms. So, I would encourage anyone who is, needs to go in for surgeries or procedures that they do it soon because we don't know what's going to happen in the fall. We don't know what's going to happen, as we even go through the summer. So, and this is true, I think, of all the hospitals, certainly in the New York and New Jersey metropolitan region, as we are past the surge period, which is a great timing for the tribute that we're doing also for the frontliners right now. They're getting a reprieve.
Ben, wanted to ask about the sort of levels and type of engagement you've seen on Pinterest over the last couple of months. How have the overall levels held up? And have you seen what people are kind of engaging on change, particularly as it relates to sort of going out or staying in type topics?
Yeah, we've seen record levels of engagement on Pinterest. So more people are visiting every day, and the number of people that are saving ideas is at an all-time high. As a company, we look at 2 things. First, we want to make sure that people have access to really high-quality medical information from organizations that are trusted. And so that's been our first priority. But as you said, we've been able to also understand what people are looking for, and it's a lot of the stuff that you might expect. People are trying to reset their sort of living and work habits. So we see people searching for easy recipes, ideas for helping their kids out, ideas for staying fit while they're at home, for reorganizing their home since they're spending a lot of time there. We also see some people that are just looking for entertainment. This is a tough time for a lot of people emotionally. They may have lost their job or be dealing with loss. And so we see people coming to Pinterest as well for ideas on how to recenter themselves and get a little bit of escape and relief from the push of pretty intense news over the last few months.
But Ben, are you able to capitalize on that increased, potentially record engagement and users if advertisers are pulling back and feeling the recession?
Yeah, well, we first want to serve users, as you mentioned. And then when it comes to advertisers, there's a mix. There are some advertisers that are really showing signs of optimism in their spending, and there are others, many of whom have all of their stores closed, that are wait and see mode. And with those advertisers, we're really trying to go to them and support them through this period. We know that it's a long game. We want to make sure that to the extent that we can help them understand where consumers are going and what kind of things they're thinking about planning for the future, we can provide that to help inform their strategies